Hello guys. Here we are. Why is Jonatan popping up? There we go. Good morning everyone. How we doing? Wednesday today. Finally looking towards the end of the shutdown. So that's interesting. See if if that actually happens tonight or if this is a more of the back and forth sort of nonsense we keep getting. So let me just pop in some music as well. There we are. Might be too loud. There we go. That should be right. Cool. Alrighty. How are we doing, guys? What are we looking at today? What are we seeing? Let's jump over to my screen. Morning, Rahul. How we going? I am doing alright myself. Been very busy today, so been all over the shop. But back to the charts now. So I think Anastasiia was supposed to be joining, but I'm not sure she is anymore. I think she said. I think she's got some emergency type thing going on. So, Louis, how we going? Vish, the Dow. We can have a look at the Dow for sure. So, Wednesday, finally, end of the shutdown. I'm very happy to see it. I want the data back. I want to get, back to normal sort of trading environment. Obviously, we had the bank holiday yesterday as well for the US and Canada. So volumes tonight will also hopefully pick up on that front as well. What I have been watching today, first of all, euro dollar through here. So after the pump last night, we basically had the ADP, some of the jobs data come through, which was not so great. I think, I forget what the exact print was. It was a negative print overall. So I feel like that one might have caught a couple of people out as well. It's not their regular, Wednesday, first week of the month ADP payroll print. This is a new piece they've been putting together. So it's meant to be it's for some of the higher fidelity data. They've started doing a few of those things since COVID. But yeah, so I believe the intent is to help sort of keep up in real time with changes with AI and that kind of stuff. Hello, how we doing, Gerard? Infinity, good to see you, man. Good to see you. And yeah, definitely, guys, throw me out any charts, anything you want me to look at, any questions, any queries, anything you have, just throw it at me. So, but yeah, first of all, like I was saying, euro dollar looking interesting through here. So after the pump last night, we basically came up to that 116 area. There's actually VWAP that comes right through here from last week. So we pretty much ran higher, hit a wall with that, obviously US being on holiday as well. Then since then, rest of New York into Asia, we basically trailed down in this channel, and then coming into late Asia, we have managed to pop out the other side, now coming back and testing the top side of that once again, with the 200 moving average coming up here as well. So question will be, can we build a base off this and actually take another shot at the highs? Or if this is going to be basically a failure point and we return lower to yesterday's lows. So yeah, keeping an eye on that right now because everyone's still waiting to find out whether the government shutdown is actually ending today or if it's just going to be another round of talks. Furthermore, if we do get the announcement, we might not actually get the opening today. It depends if Trump will want to do some kind of like public facing announcement to take credit for it, which would probably happen, tomorrow, the next day. So what are my MAs? So my MAs are, we've got, let me hide this one. So it's basically the blue, red, and yellow. So it's not quite a blue. It's meant to be blue. It's kind of teal, whatever color you can say it. 50, the red is 100, and then the yellow is 200. I've also got this gray guy coming through here. That's basically a 10 moving average. So those are the 4 core ones that I run, just to easily observe momentum, that kind of thing, from a quick glance. Can we expect to short the NAS? We'll go over the NAS in a sec as well. Long dollar CAD, then. All right, we'll run through these. Easy. And Lauren's saying currently short AU, long New Zealand dollar CAD. Okay, we got a couple CAD pairs here too. Infinity. Bloomberg mentioned that the Fed might continue to cut rates in December. How could this decision impact the US dollar and the global FX market going into 2026? So yeah, I will say, first of all, we'll run the Fed piece and I'll start jumping over to some of these charts you guys brought up. So as far as the December rate cut, I do expect that to still happen. Obviously, Jerome, a number of the Fed members, their constant thing is being data dependent, right? So government being shut down, we're missing a whole bunch of data. Naturally, they're going to say, look, we're not just going to make a call without that. So really, they're just highlighting the same thing they say every single time. But the underlying data has been showing some weakness. There are a few pockets that are still looking okay, but overall, the balance of things, we're definitely due for a bit of loosening of monetary policy going forward still. So we've seen the tilt towards that as well, with them stopping QT to help out some of the banking troubles there and add that liquidity. But yeah, coming into December, I would say they still cut for sure. So speaking of which, if I can actually type here. So as far as the December rate cut odds, I think when I looked at them up, yeah, they're basically still unchanged. They're pretty much gone from 66 down to 61, back to 63% this week. So sitting pretty flat there after Jerome Powell spoke. So yeah, if we get some of this data coming through, some of it comes through a bit poorer, you'll see those odds come back up, and then you'll see the dollar strength that we've had start to unwind and pull back a little bit. So with that, you could see, euro dollar up somewhere towards 116.70 again, dollar yen coming back down probably 153, 152.50 near term. And then the more of that we get out to sort of confirm any of the other tangential Fed comments, that'll get closer and closer to being priced in. But yeah, we'll have to see exactly how clear the data is, because some of it will probably be rushed out, since we'll now get some of it, but there's been no one actually in office, to compile the data correctly. So a bunch of it either won't have been collected at all, or they'll have limited collections. So they'll have to impute a lot of the data and basically make like the equivalent of seasonal adjustments to what it normally would be. So, all right, let's scroll back to the top. Where were we? Okay. We'll run top to bottom. So, Aussie dollar. AU shorts I can see. Though I don't like that we cracked the top. So, this was the short I took from the other day. Ended up taking profit on that there. I would be careful with AU shorts, because I think the next move is potentially up towards 66.30 or so from here. We've been building up quite nicely. We've held this strength. We finally got a tap through here today. And the other piece to remember is we've got the jobs number coming out tomorrow. Let me double check. I believe it's tomorrow. Yeah. So tomorrow morning, Australian jobs number, which is expected to be a bit better. So with that, you could see a bit of a pop. So any shorts you're in, I just wouldn't hold it through to tomorrow. New Zealand dollar CAD longs, I do like that. I think New Zealand dollar in general, it's been beat up for quite some time. So Aussie dollar has definitely outperformed relatively. Reason being, obviously, Australia is exposed to China. Some of the tariff chaos, I guess, the constant back and forth has alleviated. We also got the rare earth minerals deals done. We had slightly higher inflation in Australia. The jobs numbers wobbled for one or two prints, but then came back. It seemed more of a calculation problem. So overall, Australia's been doing pretty well. New Zealand has had a few challenges, our friendly neighbours across the pond. So at this point, though, that's pretty priced in. So I'm expecting, especially once Aussie dollar starts kicking up, you'll get a bit of a retracement on New Zealand dollar as well. So as far as the New Zealand dollar CAD trade, I like that. I think dollar CAD, that sort of thing, has higher to go as well. Gold, everyone's favorite. So I think, like we were talking about on Monday, Tuesday, this sort of higher range, you've got basically these two ranges through here. So the lower trading range that we had, we've come through the top of that, broken out into the upper end. And then we've basically been capped by those tops through there. So you know what I'm going to do? Start to delete some of this. There we go. A little bit clearer. So what I've been looking for gold, I don't think we're going to take a big run to any of the highs just yet, unless we get some kind of, strange input from headlines or something, something to actually induce that, some catalyst. But seeing as what we've got now, government opening up, unless the jobs numbers come out absolutely horrendous, and all of a sudden we go to some kind of recession, labor collapse type fears, which not expecting that. They haven't been great, but then definitely not collapsing. I would say gold's likely just to sort of range through here over the next period. So at the current point, I'd say play this area that we've built out point to point, but I'd ultimately be looking for a break through there and basically back to the midpoint of the range for today. So yeah, any further move higher or retest, or potentially up to the exact top from the prior wick highs over there after the initial large fall that we had on gold from that 4,380, whatever it was. I'd be looking for sells up here. So BTC. All right, BTC. So we had that brief dip through 100. Since then, we've recovered reasonably. Another dip back. I think when we were scoping this out the other day, this is pretty much what I was looking for. Until we we form this basically like descending wedge through here, and I'd say you lean on that top side of the wedge. You're quite likely to see another tap up to the top, and you can see this cluster point right here. So the question is, are you going to fail from there and then pull back down to the bottom of the wedge? We probably chop around sideways, that keeps tightening, and then eventually break out to the upside. That's the most likely scenario I'm looking at right now for Bitcoin. So I think longs up to the top of that wedge there, then another attack at the lows and come through 100 again. Right now, Bitcoin is, like crypto in general, it's very out of favor. I think ultimately we will get some of those topside moves coming through, but right now, just no one wants to touch it, quite frankly. So unless you get some kind of defined breakthrough there, very impulsive over the weekend or something, I'd be looking for shorting rallies until we find a firmer base. So NAS, let me bring up the other stuff on NAS too. Alright, where are we? Morning. How we doing? Good to see you. What's my favorite pair as well? Favorite pair. I'd say it'd be something split between like Aussie dollar and Euro dollar, probably. Like those are definitely my most two heavily traded pairs. So I'd probably say those two. I like them together though, because I often trade them sort of off each other for slightly different things. So I'd say they're pretty equal, both at number one, probably. Yeah, hopefully be out before tomorrow. Let me scroll back up. Where was I? Okay, NAS. That's right. So, this was the move from last week. I was looking for us to top out somewhere here about that 26,100. There were some options levels, etc. up here, and then for us to pull back lower. We definitely did. We saw that. We actually came a bit further than I expected we would. I thought we'd actually sit along this ledge by the prior highs over here before we broke out. But yeah, came down, closed the gap that we got on the Monday. Since then, pulled right lower, buying pressure come in. Obviously, we had some of the chatter with the AI fiasco and whether that's a bubble or not. And you had Michael Burry, so, guy from Big Short, obviously jumping in a bunch of short sells around the AI pandemonium, I guess. But yeah, I think he's a bit early. There's still a lot more to run. As far as public companies as well, I think they're probably a bit better. On the AI sphere, like OpenAI itself is getting a little, I don't know. It itself seems a bit bubbly. Just with how they're doing a whole bunch of things with raising money, buying companies, the amount of revenue they've got per what they're going to have to earn, with how much debt they're actually taking on, and a bunch of the deals that they're signing and putting together with the other tangential AI players that they're trying to build this ecosystem with. They're not even going through proper legal process to sort out the deals, right? They're just getting some of the, deal team, the tech heads basically to put it all together, scrub it together. I forget the main guy's name that they've got doing it, but no lawyers, no proper guardrails and that kind of stuff being put in. But yeah, anyway, back to NASDAQ. So we had this, sort of trend line channel coming through here that capped us a number of times when we tapped into it. Since then, we pulled back again into the moving averages after the initial touch, managed to rally up through there, gone past the 200-hour moving average now. You guys can see that yellow guy just here, and taking another run. I would say we do go higher on the NAS overall. If we look at the options, let's get rid of that. So options distribution for today was 25,546. So that's a 0 DTE options for New York, which I believe is actually a little bit lower. So that's interesting because yesterday the options were back up through here. So I took the short through here back into support, and then I actually took another long coming into later in New York for the rally. So given the options level being down, what was it specifically again? 546. That's right here. So you may very well get market capping around these highs here. They pull back into this and then rally from there, something like that. Almost basically very similar to the structure we were looking at on gold. Sorry, not on gold, on the euro earlier today. So the channel breakout, you come up to the corresponding left block highs, pull back into the top side of the channel, basically the resistance capping things there. So I'd probably be looking for shorts myself from somewhere here for the NAS. I would say if we actually get the government opening in time before end of day today, or if it happens tomorrow, if we do get it by end of day today and it's confirmed, not just more chatter that it might happen, then that would be something. It's hard to say whether that it's sort of priced in the same way that the market hasn't really cared about the shutdown altogether. You can also say that, will it really care about reopening? I think the reopening will actually have some degree of response, because now once you get that, people can start piecing in when certain data is actually going to come through. So overall, that should be a positive boon for the market. So if you get any kind of pullback coming to New York, options draw with that, then probably look for a play for us to run higher. LJ, don't know if this is a little too specific, but do you have any fundamental / technical view on MSTR? I don't. Hang on. What even is MicroStrategy trading at now? 231. What was the high? 434. Interesting. So like I haven't updated myself recently on their current net position, but MicroStrategy in general, obviously, it's crypto in general is more high beta. Like it's a high beta asset, meaning obviously it's going to respond more to certain market events, more susceptible to drawdowns due to things like leverage. It's also not got as long as the history as traditional markets or stocks or sort of things that are seen as more, safer type assets. MicroStrategy, with their approach that they've been building up for a while now, basically issuing debt to go and buy Bitcoin, and then cross-offering shares, which you can just create out of thin air as the collateral for that. That's a Bitcoin already being high beta. Obviously, the volatility these days has dropped, but MicroStrategy is pretty much Bitcoin on steroids, right? So, if Bitcoin's doing well, MicroStrategy is going to do extra well. Bitcoin bad, MicroStrategy very bad. So that's pretty much all it's trading by at the moment. It's pretty much just a higher beta version of Bitcoin. So if you take like Bitcoin's down 20%, 25%, MicroStrategy is probably going to be down 50% or more, right? So that's really the only fundamental macro kind of picture for MicroStrategy right now. It's pretty much just follow Bitcoin, really. Alrighty. What was next? Dollar CAD. But yeah, so all in all, for the NAS, yes. Can we expect shorts in NAS? That is what I would be looking for. Dollar CAD, I do like dollar CAD longs. I haven't looked at the chart since last Friday, but the daily structure, we zoom out. Oh, we did actually make that level, in fact. Oh, did I get tapped on that? Oh, I don't know if I did. I took this on a personal account. I haven't checked it. That's probably still sitting there. Let me see. Okay, no, okay, good. Good, I did get tapped in. This is on the wrong level in TradingView. I was going to say, because I had that as a swing trade, and if I didn't get tapped on that, that would have been annoying. Dollar CAD, look, so we're looking kind of neutral right now, to be honest, as I look at this. I hadn't checked it since Friday. We've actually dipped a lot more. I thought we were still holding up somewhere around 140.80, but we're not. Okay, so look, daily I would call very neutral, right? We're pretty much into, if you take the top side through there, we're pretty much just in the midpoint of that initial dip with the wick and the top side that we've actually managed to climb to. So pretty stuck in the range there. I mean, the 4-hour looks reasonable. Just a general retracement. We pulled back very nicely into the 200 moving average, and we respected that. Let's go to the 1. Triple bottom, pretty much. Marginally higher low. But no sort of crack through. So I do like that. I don't mind that. Okay, overall, drilling down into this, once you go to the 4-hour, 1 hour, I'd say we've probably got another move higher. This is looking pretty reasonable. I'd say you'd be looking somewhere up about 140.60 to 140.50. But overall, I'd probably rather, personally, I'd rather wait to see us actually climb up to here and then see if we get like a failure point and this coming off, rather than going long through here. Reason I say that as well is not particularly sure how market is going to react once we do get the government shutdown stuff through. Obviously that should be net positive for the dollar, but at the same time the market hasn't really cared and sort of beat down the dollar for that, right? And the other piece, like I was talking to Jonatan the other day, is that there's been a huge amount of liquidity, so US dollars that are being pulled away from the market because of the shutdown. So one, from people not being paid, they're being furloughed. You don't have all the treasury payments going out that typically you'd have that money flowing into the market. And so you've seen the TGA pulled right up to over $1 trillion. People could start pricing in that, one, you're going to get that liquidity now. Plus, just as it does start to flow, we should see another like 150 billion odd come back into the market between now and Christmas. And then, so obviously, if you're logically knowing that, you start pre-positioning from that. and we have seen a few bits of the data from the private companies outside the government still not looking that great. And especially with some of the ADP stuff yesterday, you might start imputing that, yeah, the jobs numbers are going to be a bit weaker. So you put those two together, and that certainly dwarfs the positive effect from the government opening. So that's why I'm quite tentative with taking high conviction on a number of trades today, because it's going to depend purely how the market digests the government reopening, which I can't say it's very clear just yet. So I would say either run long with that, or else wait for some kind of move up here. So if we fail, or you get a drive right through there, and then I would take a trade personally. This is sitting a little bit too neutral for my liking right now, especially with those risks coming up. Dow Jones, the Dow. Do I have? No, I don't. Dow's going to be pretty similar to the NAS and the S&P. Right now, the NAS is lagging a little bit behind. The S&P is also doing a bit better. Obviously, that's because we've had the sort of tech hits recently. And then you also had SoftBank selling its NVIDIA stake to OpenAI this week as well, saying they're getting out of it completely. Now, that's not necessarily a bad thing for NVIDIA, because they're doing that to... SoftBank is basically doing that to shuffle that money into other AI investments. So it's not like they're divesting from the AI sort of complex or sector, thinking it's overvalued or it's run its course. They're literally just shuffling pieces on the board. But yeah, so tech, NASDAQ still a little bit beat up by comparison. You got the Dow running at all-time highs. I would say we would get a breakthrough here. More highs to come, simple as that. Same with the S&P. As you can see, that's not the... let me find the CFD version. Yeah, we're a touch higher than that. I wouldn't be surprised if we do see highs for the S&P today as well. And then obviously you've got the Dow right on the cusp of all-time highs. So a break there, natural. I think NASDAQ will pull back, then get that run higher and sort of play catch up. But a little bit behind as far as the highs itself. Nikkei. I haven't looked at the Nikkei for a little bit since we had the Japanese the new Japanese Prime Minister come in. Where have we gotten to now? We've recovered a bit from those dips. I'd say pretty similar. I think overall Japan's going to do quite well over the next number of years. We're finally seeing a bunch of economic activity starting to come back to life after all this time. Some of that inflation, that kind of stuff coming through. The Bank of Japan finally wanting to move away from that lower bound and start to normalize interest rates, banking, basically bring the economy back to life. Hence as well, you've got the new PM wanting to do a bunch of those things with the very heavy-handed fiscal front from the government. So overall, I would say this is probably likely to follow S&P, the NASDAQ indices in general right now. Still quite healthy, positive risk on type moves. So unless something untoward happens to dollar yen, Nikkei should keep running. But dollar yen's just sort of also just on its current pump for now. So yeah, similar deal. Next point for the Nikkei is another run at the highs. Oops, that's the bond. Didn't want that. if it'll load. There we go. But yeah, so across the board on a number of the indices, you're basically coming up to some of these prior sort of highs. So you punch through here, you're taking a run straight for the tops. So that sometime this week, wouldn't be too surprised at all. But yeah, that's basically the point you're looking for. See if you actually get a break there. It's not impossible that we get like some sort of a double top through here, another kind of pullback, something like that, and then take a run up, right? But right now, momentum is pretty healthy. Dollar franc. God, I'm gradually getting there. Dude, I got a splitting headache today, guys. It's no fun. No fun. I did yesterday as well, but I thought it was just like, drink water, that kind of thing. Still here today. Dollar franc, we've had... So this is where dollar franc and dollar yen have very much differed. Dollar yen running higher. Dollar franc actually did manage to come back. Now, with that said, there were more... there was more chat and more comments through this week directly from the Swiss National Bank that they are getting closer and closer to more heavy intervention. You can see at certain points through their general account balance and that kind of thing, they've taken small little snippets of intervention at certain key points into the market, but they've not like dumped. They've not gone heavy-handed at all. So you can see how we're now still starting to build some degree of structure, right? So we got that. We got these higher highs sort of gradually coming through. Need to delete all this other rubbish. Delete. There we go. But yeah, so we're starting to build a structure around the base down here after we've had the massive sort of downward pressure on the dollar franc for quite a long time. So the central bank basically wants to see this pick up from here and run higher, back up into a healthier area. So yeah, I definitely like dollar franc longs right now on that basis. Clearing up. Whatever, I'll do the rest later. And as for where we've pulled back to right now, I think this is a pretty good support point. So you could lean very much back on this these moving average clusters just here. I think that looks quite nice. If we put how much is that from that move? Not quite. You're almost at the 50% retrace. So that's not bad. I don't mind it. It's basically into the top of that wick through there. So yeah, dollar franc longs I do quite like from here. I'd probably be laying out something like this. Also even a swing trade, quite nice. Something like that, heading right up to about 83. Particularly if you can get the positive swaps on it, get the positive carry. Quite nice, quite nice. All right, let me scroll down. I'm way behind. Do I reckon... Sorry, Jamie, I didn't see this before. Do I reckon they'll get S&P 500 inclusion? I mean, possibly. I don't know. It will probably take quite a while. I don't think they'll just get in straight on the size, because they take other considerations per, how the business is structured, all these other bits and pieces. Kind of the same reason that Tesla took quite a while to actually get slotted in as well. Shami asking, any plans on starting your own live stream, even if it's paid? I don't know, man. For now, I'm right here. You got me right here, all for free. So there you go. How we doing? How we doing, Camille? Good to see you, bro. But look, I mean, you guys can follow my Instagram or something. I might start posting some stuff there, whatever, if you want some extra bits and pieces outside the stream. And yeah, I'll see if I can go into some more in-depth, I don't know, looks at the market, or, you know, some sort of interesting stuff. I mean, trying to think about what I might want to do with it. Try to share that with you guys as well. I'll probably just post stuff for free. Yeah, I'm not looking to do, not sure what I want to do with it at the moment. So euro dollar. All right, so back to euro dollar. So at the start of the stream, I was talking about we had the pump last night, right? So that was after the weaker ADP. We saw this run. This was also after we broke out this wedge through here, right? You can zoom out a little bit further. It was basically this wedge created through here. It's my perfect drawings. There you guys go. Came out through there, pulled back, retest. Then we got the data, which really propelled things right up. We then came up to 116, so that's roughly where the VWAP was sitting as well from last week. So hit that box, slowed down. US government, the US traders on holiday yesterday as well for, was it Veterans Day, I think, in the US? So yeah, those guys out of the market, liquidity dries up. Coming into late New York, sort of just wafted back lower. Same thing through Asia, pretty much stuck to this channel. Late Asia, we've broken out. We've now had that second attempt higher, then come down to the top side of the channel once again. So yeah, it's pretty much now looking to see if we can hold. That was that spike top there. And then you can see that wick just before we got the ADP stuff coming through. So this is really pretty much the key level just here, this 115.68. We're a touch below the Asia low right here. If we can hold that, I don't think we will. I think we come down and retest the top side of the wedge that we had from yesterday first, probably before rallying, just with how price is reacting right now. So this initial touch back into here, we did find some impulsive buying right away, but we've just fallen straight off. So basically into the 10 moving average and come right off. So I'd be waiting for some kind of move back towards 115.60. So another 10 points or so before looking for any kind of buys. That else, I mean, you can short through to here. But Euro has been, I think it's a lot of the other guys were saying that, I mean, all through this week, same with last week, Euro dollar has been a bit tough. A number of the currencies have, because we've had this kind of split push-pull due to the shutdown, right? So no US data, we don't have that impulse that we typically get. And then, yeah, we have seen the dollar strengthening quite a bit. Various times the euro dollar holding up a bit better, but then also getting knocked around with the pound dollar moves that we have seen. We've seen quite a bit of weakness there. So euro dollar seems very much like it's trying to find its footing. Overall, I do have a tilt to the upside. We were talking with Jonatan, if I can hide these and zoom out, on Monday, that there is also the potential to see euro dollar into the end of the year coming back down to about this, where the now rising 200 moving averages and right by these lows. So it's about 114. Definitely can't rule that out right now. but I wouldn't exactly have high conviction on that either. I think we're just as easily ready to go up to 116.70, particularly if we get some of the US data coming through. It does show to be quite poor. You'll get a pump right up there again, and then see if we can keep that momentum, run through there, and possibly get up towards 117, 118 again, coming into end of the year. Yeah, so right now I think we're pretty much in the contention zone for today. I'm looking at 115.60, like I was saying, a bit of a further dip down into there before seeing buys. This is interesting actually as well. As soon as I do that, everything comes up. Messy as. Alright, let's get rid of some of this nonsense. Don't want to delete that. Yeah, that's better. Yeah, look, I think your area in here, 115.60. There you go. That's where I'll be looking to buy. I've been looking for some kind of buys on the euro today. So, Henry, how we doing, mate? I just saw your chat. Sorry. How we doing, Cherry? Yeah, DAX. I can run through DAX once again. We did before, so you can either scroll back. DAX pretty much. Oh wait, no, we did the Dow, not DAX. We can do the DAX actually then. Have we broken the high? No. It's pretty storm a run past couple of days. I haven't looked at the DAX since last week. I mean, it's pretty much like, it's almost the same, basically the same charts as the NASDAQ, minus the recent wobbles that the NASDAQ has had because of the AI situation, SoftBank selling NVIDIA shares, that kind of thing. So I was saying with the Dow, S&P, what else were we looking at? Nikkei. I think everything, we're very much positioned to take another run at these highs once again. We had some of the jitters last week around the AI situation and stopping a bubble, and there was a bit of fear and risk off that sort of crept into the market. Coming into this week, we've very much just gotten rid of that. We're back to full throttle, right? As you can see how large of a move we've established from those lows, just right the way back up. It's where we were weeks ago, past couple of days. So yeah, I'd say we've got another run at the tops. Simple as that. Obviously you got this area through here that you can already see with the dotted trend lines through here. Basically got to clear that hurdle and then you're straight for the top side. How have you been, Henry, by the way? I feel like I haven't seen you in a minute. And yeah, Lam was saying, is it Remembrance Day in the US though? Isn't it Veterans Day? I don't know, I could be wrong. I know it was Remembrance Day in the UK. I thought the US was Veterans Day. I don't know. Not sure. Gold, we can go take another look at gold once again. So we're talking about gold before. That's what these boxes were slapped on here for. We got this higher trading range. I might actually just delete the. If I can click it. There we go. Got this lower cluster after basically that was after the sort of second drop that we had. That being the first drop from all-time highs where we were down, 8.5%, 9% or something total that day. Small rally, down another 5% or so. Traded sideways. This lower band came out through the top side. We've now come up towards those prior tops. We peaked just before the second fall. And so what I'm looking for on gold right now is pretty much this. We've got this sort of somewhat of a wedge forming through here. I'm basically looking for a break for that, of that wedge through here at about 4,100, back down to the middle point of this total range. So you got the top side and the bottom side of the range here, and basically just coming down to that midpoint. And you can see the 200, the 100, all the moving averages are now playing catch up. Say over the next, by Friday, you'll see the 200 coming up through here, get some kind of a break, come down, meet that 200 there, find some support, and then see if we get another run to the upside, or if it manages to run through there into next week to the bottom end of trading range once again. But yeah, so that's pretty much what I'm leaning on for today. Just playing that wedge that we formed over yesterday and today, pretty much. Go scroll. MGN, good to see you, man. Good to see you. Yeah, Veterans Day. Yeah, so the US is Veterans Day. Yeah. Yeah, it's the same like type of holiday, but they just call it a different name. I think so. Yeah, that's what I figured, Henry. Same here, brother. Same here. What's going on? Plus my time away last week. Like, yeah, I've had so much backlog to catch up. So, did I catch the nice UJ break this morning? No, I didn't. I haven't traded anything this morning. I was super busy. So I was trading this. As you can see, I had that marked out from yesterday. So I was looking for this move to come up. I didn't get in on any of this, unfortunately. I went to bed early for me, my time, when we had the ADP. So I saw that come through. Bunch of chaos. I need to be up early today. Was looking at buying the bottoms through here, but then I didn't want to hold it, seeing as I had to run through and do other stuff today, so I couldn't nurse the position. But yeah, this has been an absolute stormer now. And finally gotten the break of that upside. So, zooming out, what was that high level that I forget? I'm going to have to go to daily. Yeah, it's just here by that wick. So 156.78, and then obviously up to these tops. I think we'll get something just below that, possibly. And then this is the other interesting point. So run the trend line from the highs up through there onto the second shoulder. And this is pretty much where we pulled back into through yesterday, through that wick bottom. And then now we built off that very nicely. So yeah, potentially, I mean, this could like run and run and run. You got somewhat of at least another 100 points from here to the first sort of milestone, and then another good bit above that, another 200. So yeah, I like this Dalian right now. I personally probably going to wait for like a retest to jump in, seeing as I missed it earlier today. I like it. How we doing, Rich? How we doing? Hope you're well, my man. You're a pound. Alrighty. Euro pound. Let's go out to higher time frames first of all. Zoom back out a bit. So yeah, last time this would have been week before last. I mean, I can see the dates just here. Last time we were talking about euro pound. Yeah, we had this wedge forming through here. Very simple. Break that wedge up through. Again, one of the classic, break, retest, run, classic trade. Quite nice to see. Euro definitely faring better than the pound. So I think we're likely to see that for some time, especially coming up to basically what we're keeping eyes on for the pound is going to be the 26th of November for the budget, the full budget release from the Chancellor of the Exchequer. So basically the British government. I think leading up to that, we'll probably see sustained pressure. Question being, if we don't make further moves convincingly, it could be very much just like a buy the rumor, sell the fact. Like we've had quite a run on euro pound. I guess what's this head level? That's pretty much what I'd be looking at as the tops. So somewhere around 88.60 or so. So yeah, the main thing to watch out for is obviously we've had a lot of bits and pieces telegraphed about the budget now. So we may very well get sustained pressure going into that. We get a tap into here, and then that ends up being the buy the rumor, sell the fact. You've got a perfect sort of sell point to lean on from there, and we get a massive dump on euro pound once we've sort of had that digested. Now that said, if they come out and release the budget and it's even worse, or there hasn't been any of the sort of concessions made that the market's sort of looking for, you could see this thing just storm through there and potentially even have a very sustained run on and on, even more than what we've had already. Because the pound's just not looking good at all. They've got so many problems, and I don't think the whole raising taxes thing is not going to be very effective. It's not really going to work. We've already seen a lot of capital flight, a lot of people leaving. If they really press on hard with this, I don't know, it's never really worked before. You could do that sort of stuff in the past. These days it's way too easy to sort of pick up and move to another country or shuffle assets around or that kind of stuff. Since we live in such a global ease of travel type world. Might have worked back in, 50, 70 years ago. Not quite as simple to just pick up and leave, but these days a bit different. Yes, exactly. She can't count. But yeah, they're funny because the interesting thing as well, we were quite calm on the pound for some time because we've seen the bond market since Theresa May, Liz Truss, not Theresa May, Liz Truss, since that debacle, where market absolutely flipped it because the bond market went crazy. The bonds have actually run a lot further since then. However, the pound itself was pretty calm. Now, if we see some kind of further spasm in the bond market, then I think pound is going to get absolutely minced across the board. It's just a question of how much of that is priced in and people sort of chill out and just understand it's going to have to be worked out, or if people throw in the bin and say, look, it's too hard. As you can see right here on the pound, if we crack these lows again, it's just like a free fall all the way down to 127 or so. So it's another 400 points as sort of a minimum target, and then you could even take a stab below there. But I don't know, man. I don't know about the UK right now. Tough, very tough. Nah, yeah, mate, all good. Good to hear, brother. Good to hear. Just entered a sell on DUR UST. What are we talking, like a stablecoin? Do you mean like USDT? Is this like a crypto? Oh wait, oh, you corrected it, euro dollar. Right, I see. My bad. Apparently I'm blind. Alright, let's go back to euro dollar, actually. Let's go to the 5, see where we are. So we're right into the pocket. I think we've still got some more downside. I think we do get to 50. This is very lackluster price action right now. So there seems to be a lot of selling pressure still there. Let me check the tick volume and stuff. Also, where's the VWAP now? So from yesterday, just above. I don't have this indicator on my trading view to show you guys, sorry. But what was the date? The first day of last month, 3rd. That's right. Where's the 3rd? All the way back there. Interesting. Okay. Yeah, I mean, VWAP is sort of sitting a bit lower from the past couple of days. So that would imply, a touch right into there. So yeah, I do like the euro dollar shorts. I don't think there's much in it left, obviously. We've had a bit of a fall. So I'm going to wait for us to come down to that point and then look to find some kind of pickup between the 115.60, 115.50 type area at the minute. No one does. They have Fabians in power, nearly as bad as Australia. Dude, Australia's pretty good. Australia's not bad. We're doing all right. Fortunately, like, whenever you get bad politicians here, they don't tend to last very long. We get rid of them pretty quick. We do have a lot of competent people in Australia, which is really good. So, is that a logarithmic channel? Are we talking about on this chart with euro dollar just here? Because this is just a simple channel. So just this guy, parallel channel, not logarithmic. No. Yeah, it's just parallel. So it's not like standard div or anything like that. It's just mapping out basically the ping pong sort of action that we had late New York and then early Asia today. Pound yen sell limit 203.3. Let's have a look at pound yen. 203.3. Interesting. Okay. Up by these highs. I can see that. I think we could even fail just below that. It'll be in that area, but I think we could even stall just below 203.30. I like that though as a trade concept because like you can obviously lean on that head pretty comfortably. So as far as like risk reward, pretty easily defined type trade. And possibly something like that. I don't mind that. That or even just a small take. Right, so you've still got you create something like that. And then this sort of start to condense in here. Because yeah, you do have obviously the pressure from the other side with that yen weakness at the moment. But as you can see, I mean, compare this to dollar yen. Pound yen is nowhere. Obviously, that's due to that pound influence. Euro yen, if we go have a look, definitely much stronger. So it's been ripping as well. So yeah, that's that pound influence we were just talking about before. Yeah, Van, thank you. Yeah, punch a like button for me, guys. If you'll do me one little favor, that'd be great. Like and subscribe. We're almost at the subscriber target milestone. And then giveaways for you guys. Got some good giveaways. I think there's a lot being planned, so definitely punch it. Rich saying, I got my first trade on the stream account this morning. W, nice. Always good to start with a win. Starting with a win. I will say as well, with the stream account, are you doing like the same rule set as what you normally trade? I assume the trading style and stuff, yeah. But are you sticking to like the 1 to 2 trades and that's it as well? Or you don't get a YouTube trophy at 90k. You get it 100, I think. But 90k is just the next 10 block milestone for us. Samir will be on later. I think I need to get a clock with UTC for everyone, because otherwise I'll get my time. But I think 3 hours from now, I think, roughly. I need to get a converter clock on my desktop or something. But yeah, 3 hours from now, basically. So he'll be in after Rich and Will, if Will is coming today. So obviously he's busy with Fund of Freedom as well. Frank Yen. Frank Yen is a pair I hate, I must say. It's just the weirdest pair. I find it so strange. Obviously, the franc and the yen being somewhat similar. But yeah, overall, the yen in the bin. Right. Franc yen often moves quite similar to dollar yen itself. Weirdly enough, that's why I don't like it. It's very odd. But then you have the other portion of the Swiss franc itself and how they sort of interact in the market. The other piece being, because their rates are so low, Japan's are so low, you get no yield, right? If you want to take a carry trade, something like that. So I always prefer to trade dollar yen instead of franc yen, since they're so similar. You get that added bonus. But yeah, I mean, overall, absolute tear, absolute rip right now for franc yen, just like the dollar yen. We're probably going to have to go out to the weekly to see anything. Nothing there. Dinosaurs beforehand. So yeah, where this stops, I mean, look, once you get into these kind of free running sort of spaces, it really is sort of just looking at each of the sort of block levels, like round numbers, and sort of use those as guidelines, because you're completely just in open air, right? Go back down to the 4 hour. top side targets are going to be, just look at market structure, look at candle structure, look at those round numbers for topping points, and then pretty much just ride the moving averages the whole way up, and basically lean onto them. So once you find, that kind of consolidation type point, you see some kind of double top like you had there, you turn down, pull back into moving averages, use that to lean on, find further momentum to resume the trend, keep rolling with it. It doesn't look like anything's going to stop this anytime soon. So we could very well see 200. I don't know. I mean, the yen is just absolutely annihilated. It's been kind of surprising, really. At some point, if it keeps going, Japanese central bank has already said that they will consider intervening. They said if we started approaching 155 again on dollar yen, which we're pretty much right there now. So if we punch that onto 160, I would start being very cautious. Because whenever we've had that in the past, those are those days where you see dollar yen just absolutely crater 300, 400, 500, 600 points, because there's so much stacked up in there as well with the carry trade that just unwinds very aggressively. Rich, yeah, okay, best of three. Nice, I like it. Infinity, how can we improve our fundamentals in trading? So, fundamentals are an interesting one, because at least for me, how I've learned everything that I've picked up is sort of just exploring. So I just sort of get curious. I just try and look at the market itself, try and think about how it would work just from literally, what is a company? How does a company make money? They need to hire people. They need to supply a service or a good. How do they get that good? They got to buy the materials. Where do the materials come from? Materials come from this supplier in X country. Maybe their own country doesn't have it, so they got to get it from like China, or they got to get it from Australia. And then where does that supplier get it? They get the raw materials from like a miner, and then you look at the miners, and then who owns the miners, and basically start pulling apart threads kind of like that. And then over time, you start building up all these pieces. Now, as far as sort of starting that, because it is very hard to figure out where to start, Bloomberg is always good to listen to, say, whilst you're sitting there trading, have it on in the background. You can hear all the people come on. They'll be talking about the relevant stuff that day, both across, FX markets, bond markets, equity markets, talking about central banks. They talk about the data. They talk about a lot of the inner pieces of the data. So not just like when you look at the headline number, right? You're looking on, Forex Factory or MyFX Book, whatever, and you see the headline data, the print, the expected and the estimate, and then the release number. You're not seeing all the bits and pieces under that actually make up the entire report. So that's where you can either go and look for those reports. Often, if it's a government entity, they'll publish it on their website, or else private companies will also do the same. And then you can actually get the full reports and look at like the breakdowns of labor statistics and, inflation, like exactly what sectors we're picking these things up. The other way to do it is listen to Bloomberg when they have people come on. They go into depth talking about whatever release it might be, and then they'll also start relating that to other parts of the economy and why it matters and how that sort of all adds together. So that's a good way to build up that framework. It's something you can have in the background. And then once you hear something curious or interesting, just go to Google, start looking stuff up. If you want to use an AI, be very careful with the regular AIs out there. They're not very good. They get a lot of financial things completely wrong. They get confused. They hallucinate. One of the better ones is going to be Perplexity. So Perplexity has its own fully fleshed out stuff just for markets. So it's quite good. There's a lot more it's a bit more like stocks oriented overall. But that's definitely the best place to go if you got those kind of general questions. But yeah, so that's sort of where I'd start. You got other people like Ray Dalio. You got a number of look up like sort of the famous hedge fund managers. Ray Dalio being the first one. He's written a bunch of books. He's got his YouTube where he does a lot of explainers, trying to put stuff into simple, easy to understand sort of terms for markets, breaking it all down. You've got there's some of George Soros's work. Some of his books are a bit rubbish. Some of them have a few gold nuggets in them. And there's various other hedge fund managers like that you can also pick up. They talk about their trading thesis and approach, and then often they're explaining some of that and bring out a bunch of the worldly applications. But yeah, there's no exact right way to do macro fundamentals. You sort of start pulling apart things and try and figure out how it all fits together. How do I validate a break on the channel? So, let me zoom through here. So for a break on the channel, I want to tend to see not just like you tapping outside the channel and then pulling back in. I want to see an established close out this side the channel on, firm move, ideally closing towards the top of the bar. Then see the next candle also close outside. So if you immediately pull back in and then close back inside the channel, no good, obviously. Once you've established that, the beginning of the third bar, as long as you get sort of a very small dip and start to run, in this case, bullish pretty quickly, then I would say that's confirmed. So normally, if you wait that long, you're going to miss a lot of the move, however. So I'll generally go look for that break there. Once you get the close of that first candle, enter on the second, and then just pull us down below that first candle. And then I'll target, in this case, it'd be up by the highs just here, about 187. I'd sort of put the move like that. So yeah. So that's sort of the best way that I do it, in between confirming the break of the channel, but also not wanting to miss out on the move. Like if you wait too late, your risk reward is all messed up because it's already gone. You've lost half the move, and you can get like a pullback pretty easily. Yeah, there you go. Samir will be on later on for the final session today. And yeah, it's in the description for the timing for you guys, since I don't have a UTC clock right in front of me. Sorry. I've seen a bunch of your guys' other comments as well. I'll just run through them. I'll get there. All right. LJ, do you think that pound dollar is going to go down at about 1.30200, 3020, following the downtrend on high time frame? Yeah, so we were talking about pound before. The main thing to look at, basically this is all due to the upcoming budget announcement coming through. So let's zoom out a little bit more. So all of this downdraft of activity through here is all related to the budget and a lot of the cost interest troubles. So basically interest on the debt that the British government has right now, and the fact they're not getting anywhere near enough tax revenue to cover that, and they pay out way too much in benefits to people. So, they need to tighten their belt with that because the math doesn't add up right now. And a bunch of the policies to do so. Unfortunately, like when you get into those problems, there's no real easy way to do it. No nice way, no fun way. so the market's going to see it as quite poor. Plus, it is also a bit aggressive in how they're doing it. You're going to get, if you start taxing people so heavily, they're just going to leave, wealthy people. So, question right now. Let me come back down through here. Question right now is, with this 200-hour moving average, we basically pulled back. This is the same deal with euro dollar today, and we've seen dollar yen shoot up. So we're getting a bit of that dollar strength coming through. Some of that's due to being on the back of the government shutdown finally potentially ending tonight. So if we do get that, people can start pricing in. One, we're not going to have any problems with the shutdown as far as like the workers getting paid. It looks as though they're not going to get extra compensation for being out, but they should still get reimbursed. That money will start flowing back into the economy. The Treasury starts paying out the coupons that they need to pay. Overall net, slight positive for the dollar. So we're seeing that come through. If we can hold this though, I think we still are looking at sells. So that's pretty much what I'm looking at today. The other point I would say is with this lower drop, we did tap through, if I clean that up, we did tap through the wick just here, which I never like to see that. That always shows there's, that sort of door has been opened now. So I think this is going to be very easy for us to come back down. And yes, just like you're saying, see that lower band about 130.20. Obviously below there, that's going to be the real test, because if we manage to fall through that floor, then we're all the way down to 127. And coming up towards the 26th of November with the budget, there'll be just more and more pressure. I can't see any reason to buy the pound right now at all. Most of the data that we've seen come out as well has been pretty poor repeatedly. So we had that drop down there. That was from the ADP. But yeah, I'd say stick to the sell side on the pound. Just give me 1/2 second, guys. I'm like distracted. I'm getting a couple of messages from somewhere. Let me just check. It's gonna be literally 15 seconds. Cool. Sorry about that. But yeah, so Joe, basically long short. Now I'm not distracted. Keep selling pound, I think, for now. I don't see any kind of confident movement to the upside. You might get a slight tick higher, like I was saying, sort of what I mapped out with this. I'll pull back into closer to the middle of today's range, depending on if euro dollar can actually establish some kind of foothold through here and then run higher. That said, even on the euro dollar, I don't expect us to be just storming off from here. I think this is likely to sort of churn around here first for a bit, wait until we get more clarity on when government opens, when we're going to potentially get the next inflation, the next NFP, all the remaining data bits that have been missing. All right, I talked about that in circles for like 3 hours. Sorry about that. It was very disjointed, but yeah. Basically, if we were talking about the macro fundamental stuff with that before, basically pull things apart, sort of same with the data headlines that you guys see. Why is the CPI important? What does that mean? Right? You can just Google stuff. PMIs. What is a PMI? What does that mean? Why do we look at it? ISM. What does that mean? Why do we look at it? difference between like ADP, the non-farm payrolls, why the wages component is important. What else do you have? Job openings, week-on-week claims, how the quits rate, how many people quit their job. That's an example of a healthy economy, because typically you only quit your job when you've got another job, and it's normally higher paying. So a lot of people quitting their job is actually a good thing. So it's stuff like that, but that's where you sort of start pulling all these things apart and then formulating everything. Is Perplexity useful for it? Yeah, it is. It's really good for drumming up charts as well. If you've got like a question for stuff, and you want to research some of that, like it's really good at sort of piecing that all together, doing that research and packaging it in, some sort of infographics or varied charts or whatever it is. So it's very, very easy, very simple to read. You can just knock through it. Quite great. I found Perplexity quite good and reliable. No worries, Cherry. Yeah, sorry, I was talking around in like circles for a bit there. I was distracted. So, Infinity. What about gold? Can we go for another high? So, like what I was saying earlier with gold, I don't think we're going for all-time highs again this year. I would say that's incredibly unlikely. I think if I zoom right out, let's go out a bit further. So you can see that was the tops through here, 43.80 or so. We came down, basically made that double top, collapsed through there, found an interim bottom, small dead cat bounce, really. Only to waterfall off and take the second run lower. Now we've got this trading cluster, these two sort of ranges. So lower band, high band. We've ran right through the midpoint, come up to the high band. I'm now looking for us to pull back to that midsection through here at about 4,060 to 4,050. Have another touch into there. That's kind of the neutral area. And either you get the move up or you get the move down and then up, and pretty much just chop around sideways, as I've got scribbled out right here. So basically just back and forth trading in this range for the next little bit. I don't think it will be until next year that we get the further impetus coming into, after Christmas, for people to start piling into gold heavily once again. Gold's had an absolute stormer of a run. Still very much bullish overall. This is just a temporary pause in that momentum, in that direction. Just like when we hit 3,500, we traded sideways for quite a while. So that's what I would see for the interim. I think we'll chop around here in this lower section first, before we get some kind of move into the top area again. The next portions of that would be, say, if the jobs number comes out really, really poor, you could see a distinct risk off move, dollar selling, that kind of thing. And also that would mean the Fed's going to cut rates again. Like that would start to get priced in very quickly. So with that, you could see gold go much higher. Because sort of the breakdown, a large portion of gold running higher is also rates coming back off. That very much affects gold. It's very positive for gold as rates come down. Gold being a non-interest bearing asset, that makes it much cheaper to hold gold. And quite often as well, interest rates are coming down because the economy is struggling a bit. That's why you ease financial conditions. Therefore, it doesn't mean the economy is falling apart, but typically it's meant stuff is getting a little bit weaker, a little worse. So hence more risk off, thus also positive for gold there. But yeah, so until we get that data through, I think it's chop around in here. Once we get a confirmed date for like non-farm payroll, that kind of stuff, you could see a pop through to the upside if it does come out really poor. But yeah. Mental wealth trader. Perplexity is very good, but don't trust AI for everything. Check and validate and watch out hallucinations. Yeah, that's what I was saying before. I wouldn't use any other AI for financial stuff, like any of them, funnily enough. I found pretty much every other one that I have used has hallucinated quite a bit. The one that's the least was probably Gemini, as far as financial stuff, with the others. But yeah, the best is definitely Perplexity. But yeah, once again, and that's because they've got, you know, a dedicated financial section of the AI that they're actually building out and training specifically. But as always with AI right now, always double check everything. You know, check the references, check the sources, because it makes stuff sound really good, and then it can be completely wrong, right? So, I think it's a buy. Look at the last two moves up. I assume we're talking about. I'm going to clear this up a little bit because it's a bit messy. Let's just go. Do it. That sort of maps it out a bit further. Last two moves up. So are we talking about in this recent trading range through here? Like through basically today? Or are we talking about the moves up from the absolute lows into this initial point, small downdraft, and then the break right up to the high side? Yeah. So is yeah the first one or the second one? Yeah, looking at, well, okay, we'll put it this way. If we're talking about from the lows up to this interim point, slight tick downward, and then the very strong drive higher, we basically come into, this is the topside resistance there. So after that strong of a drive, and we've now got everything opening up and the like, I'd say you probably consolidate here, pull back a bit before you get any kind of punch through for now. And then same, you can see the price action today. We're starting to create on the lower time frames, basically lower high, got a marginally higher low through there, right? If I delete that, let's clear that as well. So we're not exactly accelerating. We need to punch through this pretty convincingly. Fabian, how you doing, mate? Good to see you. Where is Mike? Mike is actually here. He's right next to you, in fact. He's just hidden in plain sight. And yeah, it can leave you very pipped off. Very pipped off, Mike, indeed. Go check out Mike's podcast, Pipped Off. There you go. That's your shout, Mike. It's great. Please improve spreads on gold. I believe the changes that were made over the weekend were actually to assist with that, to bring down some of the spreads. But the spreads are not too big anyway. Like, if they're big, you must be trying to trade it in like absolute micro, trading spans, right? Like if you, I don't know, on like the 1 minute or something, and you're trying to trade like here to here, then the spread's gonna hurt you a bit. But gold's not really something. I mean, trading on the 1 minute is a bit wild on gold. Not like you can't do it, but no worries, Mike. Gold hasn't broken anything. We're still below these highs. We haven't gone anywhere, right? So we're just churning around in this block. So to say we've broken anywhere isn't quite correct yet. Because when you get this, you can very easily just get either a failure just below that interim piece, because this has come down and been collected with the moving averages through here. And this is also roughly the midpoint of the trading range now. So you're going to find volume in there. But yeah, you can often come up, fail just below it, or else get a double top in here, and then you come right back off down to the bottom end. So let's delete that as well. Draw that out. Draw that out there. Get rid of this top one so it's not confusing. So this is pretty much the formation we have right here on gold. And then the near-term piece, you've got like this. And obviously, since if you went to look at a time frame, you'd see that building up through there. Right now, we're trying to press the head of this. You would see us come up to this section, and then you probably come down to the bottom of the wedge. And eventually, at one point, you'll get a break either side, right? Simple as that. So that's why I was saying before, are you talking about the big section, the small section? Because it's going to be like, what time frame are we talking about? As you say break higher, we can go to like the 15-second, you know. And you can see it moving, right? So what's the, what's the time frame? What's the objective for the trade? Where are we entering, etc.? No worries, mate. Anything on DAX? Mohammed was asking before. I missed that. Sorry, bro. We did have a look at the DAX before, but if we zoom out a little bit. So just like the other indices right now, I'm saying very much got the, after the sort of mild sort of fear, risk off sentiment that we had come through last week, mostly around a bunch of the AI stuff where people going, you know, is it a bubble? You had Michael Burry shorting, what was it? Nvidia and Palantir. And then that drummed up all the chat. We've seen very much all the indices sort of bounce back. So they sort of moved in sync. Even the non-US indices moved in sync just with risk off, risk on moves, taking direction from the US indices. We've seen the bounce back from there very aggressively. One of the most aggressive is on the DAX. So we were saying earlier, so long as we can clear this hurdle up here, you can see the sort of dotted lines through here, you're taking another run at the highs. So right now we're sitting at resistance. Obviously with the pretty much straight run that we've had up, I'd probably preferentially look for a small pullback through here, right, into like this prior head. If I can draw straight, come on Picasso, we can do it. There we go. I'd lean on that level and then look for a move to the highs. Because I think we were talking about the NAS earlier as well. That looks horrendous. Need to clear this all up. But yeah, the options are on the NAS are pricing down here for the 0 DT options for New York today. So with those options, you tend to get a bit of a magnetic pull towards price. Pull back into there. That's where I'd be looking to buy. Find that as support, and then that's the opposite of the sort of trend line that capped us a few times through the past couple of days, weeks. Buy off the top side of that, so you've basically got a break, retest, and then run, and that's what I lean on. So similar deal on the DAX there. Ahmed, how we doing, mate? Good to see you. Haven't seen you in a while. I'm doing better, mate. After my time in hospital last week, doing a bit better. I'm still a bit rough at the moment. Haven't fully sort of got back to it. I thought I'd be feeling a bit better today, but no, I've still got a splitting headache. So still recovering, but doing much better. So good to see you. Where's Rich? He was in chat here just a little bit ago, but Rich will be up with, I think Will's turning up, I believe, or not. Actually, I saw him. I think he sent a message earlier asking anything. Okay, Rich will probably be here in like 15. I'll probably have to take like a 10-minute break, and I'll probably hang around after that. So I'll come back to see you guys. He is early and wrong. What do you mean? Wait, who's this? Michael Burry? Or as a bad trade, our earnings are great, and when Nvidia reports, the whole trade is moving up, like Burry, but he has been wrong many times. And to quote the movie, I might be too. Yeah, I agree. Yeah, dude, I think Michael Burry is way too early, especially this time around. I think there's a lot more to go in this AI train before we, hit the final station. And even before we hit, because there'll be some kind of stumbling block eventually where we hit like a wall just because we've ran so far, and then naturally you pull back. And at that point, everyone will be like, oh my God, is the bubble popped? Is it gone? But then, people, it will find buying support because everyone knows this is the future. Everyone's hungry to buy in. People just want to buy in at better levels at some point. So yeah, I think it's way too early. I think there's a lot more in it. The other piece is that, them playing all these circular games with the funding, people are viewing that as a bit sketchy. It sounds kind of Ponzi-like, you know what I mean? That's circular financing. But the other part of it is if they were making acquisitions, people would be praising it and going like, oh, that's great. You've got like vertical integration now. So it's kind of the same thing. They're just staying separate entities and then just shuffling the money around anyway. And I think that also protects them where they seem to all be doing it so that they can keep the thing going whilst continuing to expand the research, the tech, all that kind of stuff without running dry. So I think it actually strengthens how long the cycle will go on for. So yeah, appreciate it. Yeah. I just had some stuff to get checked out and that sort of thing. So I might have to go back in. I won't go into some long-winded thing about it on here with you guys, but doing all right, surviving. I'm alive. We're good. So, but yeah, I may have to go back in at some point. See how I fare in the next 2-3 weeks. We'll see. Mid to late 2026 if it pops. Yeah, I agree. I think it's the 6 to 9 months next year. So kind of that third quarter. So I think basically we've got like 9 months from now. So it's basically that mid to end Q3. Not necessarily when we like pop, but I think that's when the massive growth, stocks, indices, gold, everything in general, all the growth across the board sort of hits a wall. That's also, if you try and forecast forward a bunch of the economic conditions, that should also be roughly peak liquidity as well. You'll have had rates come right down. You will have had that sort of enthusiasm shot in the arm. That will be fully priced in. Liquidity hits its peaks. And then at that point, who hasn't bought, right? But yeah, it's always that final sort of 6, 9, 12 months of these kind of runs that end up being some of the biggest, so. In 5ers, does trail max drawdown locks at initial amount? Locks at initial amount. Do you mean like if you set it at 500, the trailing drawdown will always be 500? Is that what we mean? Yeah, probably, Fabian. All a bit crazy here. Hey. Yeah, no. Look, I will say I'm definitely looking forward to. I need some like genuine, like proper time off during Christmas. I've just got so much other stuff going on as well at the same time in life and all that. So just getting slammed. Just been busy, underslept for so long, sort of catching up with me, that kind of thing. So I need like a proper break at some point. Obviously, Christmas this year falls in like the middle of the week, so markets will be, forced shut, forced to step away as well. Unbiased strategy. So yeah, yes. Okay. So account purchase 100k, 5% is 95k. Oh, okay. I see what you mean. So the daily stop. Yeah, because I wasn't sure if you're talking about like a trailing stop on like an actual trade, but if we're talking about the daily stop out for the account, from if you're starting at 100k, it'll be 95, but basically it's always 5%, right? So that's where if you go, say you have 95k, it's not going to be exactly 5. It's going to be what, 4.5, because 5% of 95 is a little bit less than 5k. And then the same way as you go higher above 100k, say you've made some profit, your daily stop point will be a bit more than 5k. Because if you got say 105k in the account, you've made 5k profit, 5% of 105k is going to be 5.5. So yeah, it's always a percentage of the level. So if profitable and size increases to 110k, max drawdown level will be locked at 100. No. So max drawdown level will still stay at 90, right? Max drawdown, the 10% will stay at 90. The 5% daily is the only one that moves. So the 5% daily will be 5% from your highest point of equity or balance, whichever one is higher at rollover. Your max daily stop will be 5% below that. But the absolute stop out is a fixed 10% from the starting balance. So an example would be if you have a 100k account, we're talking about the high stakes, it would be 90k, right? And so in bootcamp, yeah, 5% is the max overall. Yeah. Yeah, so drawdown is static. For the max drawdown, it's static, and it's just your daily loss that is 5% of whatever your balance or equity is that day. So that one is sort of trails per se, but it's just 5% for that day. But the actual hard stop out drawdown level is static. No worries. All good, man, all good. Been a rough year, yeah. Get some rest, bro, and tack the new year with vigor. Yeah, definitely, man. That's the plan. I appreciate your words as well, Fabian. Oh, hey, Rich. Yeah. Oops, I just removed you. I think Remy added you.
Like sitting over you going, okay.
My bad. I had like something over another screen open down the bottom. I couldn't see it.
What's up, mate?
Not too much. Going all right. I'm more awake today, which is good, but I still got a splitting headache. So yeah, it just won't go away.
Why have you got a headache?
I've had it since I came out, like all weekend. I thought it was just you're on hospital food, that kind of stuff, not enough like electrolytes, that kind of thing. Have a bunch of Powerade, normalize, reset, be good. But yeah, I've still got it's like wrapped all the way around my head, my brain thing, the past couple of days. So
did they like dig into your brain while you were there?
Yeah, I got brain chip.
Nice.
Elon Musk brain chip. Yeah.
I was about to say, now you can see a bunch of stuff, but need to just get that inflammation down,
Yeah. That's why I'm wearing the hat. I gotta hide the graft. Right?
What number am I thinking?
I said a number in my head. I know.
You did? You know what was it?
Nothing.
No, say the number. Dude,
Okay, I'll say another number, 72.
No, that wasn't it.
I was going to say 69, but...
It was 69.
I figured. That's why I was like, should I say that? Can I say that?
No, the number was 69, mate.
So I was like, I think you know what I'm thinking about.
I was just like, okay, if you're going to get this number right, when you said 72, I was like, no, man, it was right there. The number was right there, mate. Yeah. It's a shame you've got a headache, mate. Like, I struggle with headaches sometimes. Not crazy headaches or anything, but it's usually if I'm super tired, like if I haven't slept well at all. It's like a tension headache. It just like sits here close to the palate. Temple? Not palate, temple.
Yeah. No, I used to get them when I was like a kid, for a little bit, and then it stopped. Fortunately, once I got older, like migraines and stuff. But I don't know. I just still
maybe
feel
you have too much blood in your system, mate. Like you're too big.
Yeah. It's my brain just expanding too much. Just trying to sleep. That's it.
You're like, what was that? Man, what was that?
Megamind?
Megamind, yeah. Like,
was that Incredibles? Is it?
No, I think Megamind was its own like thing. Yeah.
Oh yeah. He's the blue guy.
Yeah.
That's right. Yeah. Nice.
Have you been in any trades today as yet?
No, I haven't. I didn't get to this morning. I was busy all day, afternoon. Then jumped in here. I was looking at a few trade setups just before I jumped on, but I'm sort of waiting to see where we level out. So I was looking at euro dollar, if my chart will work, at a possible pickup through here. But I'd like to see a little bit more weakness. I just don't like. We sort of very indecisively sitting down here. So we go down to the 5 minute. I don't like the fact we've broken the Asia low through there, but we haven't really like punched through. And at the same time, any of the pickups have been pretty stagnant as well, right? Yeah. So yeah, I'm sort of waiting for some clearer direction. And then similar deal on dollar yen. I missed the break that we had through here earlier today. So looking for a bit of a pullback somewhere through there, and then enter.
Nice. Yeah. I ended up getting a EU short this morning on my the stream account on the stream this morning.
Yeah.
It ended up being a winner, so I will show it on. Let me run through what I was seeing. So first and foremost, this is EU on the 5 minute. I'll go to the 15 minute. We basically had this 15 minute base area yesterday, where price, was showing a little bit of upward momentum, but slowly, and then eventually we had this small little area of consolidation, and then just ramped up. So this area to me needed to be tested again. Obviously, with New York, no real participation from the dollar and from the Canadians. Just lackluster movement during during the New York session. Coming into the new daily open, it was flat. So if you just basically looked at the chart like this, it was absolutely flat. There was very, very little happening. And then eventually it started drifting a little bit lower, came back into this area, my little 15-minute bullish base area. It came into it, reacted off of it, but then just went back to basically the highs of the day. So very lackluster movement. Then eventually what we had was effectively a double top over here. So not quite a double top, but close enough. If you just have a look at how the candle body on the 15-minute closed, it just signified to me that we were done. We were done trying to push higher, and then eventually we started pushing lower. If I go down to the 15-minute, the reason why I entered was exactly this. We started pushing up. We basically made an M. So if you just discount this whole bottom section over here, it pushes up and then starts pushing lower. So if I just move that aside, it's a little bit of an M. Forgive this little... We have effectively M, slightly lower tops in relation to where it was previously. Started pushing a little bit lower, tries to push higher, it fails, and then it starts dropping. The M, this wick over here, this section, this basically, when we tried to break lower, that was the point that we needed to break lower and then potentially try and push back above and then fail and then start going down on this leg basically. So that's effectively what I was looking for over here. Started pushing down, made a drop. So area of interest, failure to push higher, a drop. We have a base candle on the 15 and there's the confirmation candle. On the close of this candle, I took the trade. This is a 1 to 2, so it's a 5 pip stop loss. Didn't really think that it was going to really... Why is it doing that? Didn't really think that it was going to run much higher than this swing point over here. Didn't really think that it was going to really do anything on this point. So 5 pips is fine. Initially, I wanted to test this bottom section of Tokyo. I wanted to at least test this, and that would have been a 7 pip trade, which was a 1 to 1.4 R trade, which would have been fine if I'm risking 0.5%. That's still more than 0.5% of gain. So I was happy with that. But my plan is to do on GU 5 pips to 10 pips with the 0.4 just to cover commission.
Yeah.
So what happened was price started coming down. As I entered, I missed the entry ever so slightly because it being a new account, you have that pop-up that says, risk this, disclaimer, and I was, oh, come on. Anyway,
trading thing. Yeah.
So I think it was 3 pipettes, mate. Further than what I wanted to enter, but that's fine. Anyway, started pushing lower, and then when we reached this low point of Tokyo, because we had struggled so much in this area over here to really push lower, I just decided, okay, I'll close it here for about 7 point something pips. Had I left it open, it would have pushed through, done a little bit of a pullback, would have made this failure to push higher candle, this doji with the long wick above. I just see them as failures to attempt to push higher, especially if it's followed by another bearish candle. It would eventually have reached my full TP for 0.5%. So I will show that now on this. Here's the trade breakdown. This is the entry point on this black line. The red line is where the stop loss would have been. This green box was the, let's call it like this area of consolidation struggle point, basically. Just pulled it through just to see how it would react there. It basically struggled the whole time wicking over here on that box. This initial candle gave me cause of concern. I thought maybe, what if we start pushing higher? Then this candle started printing a bit higher, but then eventually started dropping lower. I decided to close on this orange line, which was just at the bottom of the Tokyo. So literally the absolute bottom of that. And then the green line is where my TP would have been. This is the very first trade. I don't know if people can actually see it all that well. This is a 4K screen, so it might be a little bit difficult to zoom in on this. But my initial balance was 5,000, which is a regular 5K high stakes account. I risked 0.25%. So this whole section over here was 0.25% of the account, which equated to $12.50. I was trying to get 1 to 2, which would have been $26 with the commission added. Once commission is taken off, it's $25. It's exactly 0.5%. I closed it at $17.75 for a 0.38% increase for today. So very happy with that, and I'm glad that I closed it where I did, because there was something about the way that we were moving that seemed very sluggish. We have been range bound, not necessarily in this area, but if we have this area of interest on the left, we had this area on the left here where we really struggled, an area of consolidation with the breakout, and just coming back to it, we already indicated a bit of a struggle point. So I was happy to close there. If it broke through, that would have been an extra 2.8 pips, that kind of like thing, which, I mean, it's the difference between $25 and $17. It's 0.12% difference, but I'm happy with this as it is right now. So that is my very first trade on this account, live stream. All of it will be streamed live. So this was with the morning trade. I'm going to look for a trade for today, and then at the same time, I also updated my sheet ever so slightly. So I've added NAS with its own risk parameters. I've added gold with its own risk parameters, exactly so that I will always have the exact risk specifically. So I'll be jumping between 0.25 and 0.5% risk. So if this is a 10 pip stop loss, then it is going to be 0.25% risk. This one currently is already a 0.25, and this one's already currently a 0.25. But this morning's was a 0.25% risk exactly. I've been playing around with my sheet a little bit. I need to update this bottom section over here for the 123 RR. Because of the changes that I've made, the 123 RR is now no longer calculated properly. So once I've dealt with this, I can always just re-share this sheet itself. You can see down here that I'm 0.34% up. I have 10.34% to lose on this account. So I have 10.34% of equity left. Starting balance is 5,000. I need to make another $383 before I pass phase 1. Current equity is 5,016.75. Happy with that.
Nice. I like it.
Good.
And like I was saying before, always good to start it off with, good traction, bit of momentum, right?
Yeah, like I know Will talks about you should always lose your first trade, because then you know that you're going to be serious after the first trade. Kashi, the account size is a 5K. It is a brand new high stakes 5K account with the 5ers, and my intention is to trade this account purely on stream. Everything that you're going to see, it's going to be my analysis. It's going to be my trades on live stream. Nothing after the stream, nothing in between streams. I'm allowed to close a trade between streams, but I'm not allowed to enter a new trade in between streams. So I have a stream in the morning with Will normally, which is the Apex Brotherhood. Will at the moment is unavailable because he's traveling through Italy. And then I have the 5er stream in the afternoon. So I have 2 windows during the day where I can look for the best trades to try and pass this account live in front of everybody. So that's
nice.
it. So generally what I would do is I would also explain my reasoning behind maybe closing a trade a little bit earlier, or maybe doubling my risk to go from 0.25 to 0.5% risk. I'm only ever going to risk 0.25% or 0.5%, and I will only ever risk 5 pips or 10 pips, depending on which asset I'm trading. So if it's EU, it's going to be 5 pips. If it's going to be GU, it's going to be 10 pips. If I'm looking at gold, it's going to be slightly different as well. Gold, I'll probably try and risk like 0.02 lot sizes. But I think the account is a little bit small for the amount of volatility that gold can have. So I'll hold off on gold for now, and then NAS I will eventually look at trading, especially if we start trading during the New York session, or if we stream into the New York session, I'll try and trade NAS as well. But as it is right now, it will be EU and GU primarily.
Fair. I like it. Maybe I'll get one up and do it with you guys as well.
Dude, it's so much fun. Like, okay, it's stressful, but it's still fun at the same time, because you know that you're going to be held accountable. Like, the people in chat is going to be like, LJ, you screwed up by doing this. You're going to have to like, did I screw up? I don't know. Did I screw up taking this trade? But I think at the end of the day, it's a difficult thing to do. It's to be entertaining, be engaging with everybody that's on stream and in chat, trying to give the best advice as possible, and then also still have to focus on your own trades. So yeah, it's a difficult thing, but I think once you get used to it, or once you really dial in on it, it becomes second nature, and then it's fun.
I should Jonatan didn't get it. Holding hands. Wait, what was this?
I don't know. Holding hands. Henry's gonna have to explain.
What are you talking about, Henry? What are you going on about?
Jonatan's a great trader, mate. Like, he's really good. But I think he has the same issue that I have when we trade live. It's sometimes you're so frazzled by trying to, pay attention to everything, that you kind of miss maybe your opportune trade entry as one thing. Or maybe it could be that you get influenced by other people's opinions about the trade, and then you kind of like start doubting it, which is something that I used to struggle with, is like somebody else's opinion on my trade. I'll be like, did I screw up? I don't know. What does LJ think? And then LJ says he's going long and I'm going short, and I'm like,
oh no.
So yeah.
Yeah. No, definitely. Especially bouncing around all the charts. Like, when you're going Euro Yen to the NASDAQ to the DAX to this to that to whatever, you're just not looking at the pair you've got eyes on.
Yeah.
You can make the move and then you miss it, and you're like, oh, okay, I've gotta wait. So
yeah. That's why I'm trying to keep my focus points as only GU and EU, gold, and then in this case NAS. So I can split the screen in this way, and the idea that I had was for EU and GU during London session will be my focus point, and then gold and US tech, or in this case NAS, for the afternoon session, for New York session. So all I have to do is just during our normal stream, I can flip through all of the pairs as I want to, and I can do my analysis, but I have no intention of trading them. Yeah. And I can then just come back to GU and EU to do my like analysis, and then at the same time wait for my setup. Which, if there was one setup already, it's probably not going to be another setup for a while. So I can just wait, Yeah.
Maybe I should get one and trade it on like the seconds chart or something ridiculous.
Holy crap.
For fun.
Have you ever done the seconds chart?
That'd be wild. No, like, I've looked at it, but I've never traded anything off the seconds chart. I don't know that sounds, it sounds fun though. Now I think about it.
Dude, that sounds mental. Like, imagine you see something and then you look away, and when you come back, it's already played out. And it's just like...
Yeah, it's got hammered.
Okay. Sorry, guys. I just lost that trade. No. I don't know. Like, the seconds chart is like... It's so quick. So fast. I don't generally go lower than the 5 minutes. I'll do a breakdown from daily 4 hour, 1 hour, 15 minute, and then I'll either take my trade entry on 5 or on the 15, depending on which one has the best flow.
Yeah.
So which one, like right now, we're a little bit sideways, especially before this trade, basically. So between these 2 points, we were a little bit sideways. There's no point in going over to the 15 to look for a trade entry.
Yeah.
Because it's too, too sideways. But if it was like yesterday as well, after this breakout over here, after this consolidation breakout, then looking for a trade, I can then start looking at, for argument's sake, the 15-minute to see if there is a setup on the 15, which there wasn't. But, obviously with the idea of the holiday yesterday, there was a good setup on the 15 here yesterday. So you had the low point down here, you had a singular reaction, started pushing higher, came back to test. If I go down to the 5-minute, you had this lovely area over here. Oh, what am I doing? You had this lovely area here where there was indecision, and then it started pushing up. If you then decided to take this whole area basically as a break and retest, pushed higher, took highs, came back low, did not break lower. So the whole bottom of that wick to here, it's basically higher high, and then it starts printing higher. If you go over to the 15-minute, you will see that there was I am lost. There we go. You see that there is a very lovely, it starts rallying, it bases at the top here, and then it confirms the rally on here. So you could have had an entry on the 15-minute on my rally base, rally drop, base drop. If you look at it on the 15-minute, you'll see it's a slightly deeper pullback, but then it just confirms going higher. So you could even have entered closer to there, or you could have entered on this initial break and continuation section here. So it's just the idea of the 15-minute can work, but you need a little bit more volume, you need a little bit more reaction, a little bit more momentum. But in general, the 5-minute is my sweet spot.
Fair. Yeah, I bang around, like intraday, I bang around between both 5 and 15. Normally I take majority of trades off the 15 and then just like hone in on like the 5 and the 1. Yeah,
I do like it for intraday. I'm like in between a scalper and an intraday trader. I don't like being in trades very long. The longer I am in a trade, the more I feel like it's doesn't have momentum, so it's going to start going against me, especially because I have tighter stop losses in relation to the full move of the day. So if I'm in a trade for 1 to 2 hours, then it's just like, well, this is consolidation. What am I doing here? So
yeah, no, definitely with how you lay stuff out, you shouldn't be in it very long at all.
I mean, this trade was from 11:10 my time to an hour and 10 minutes if I played it to full fruition, but I only ended up being in it from 11:10 till 11:50, so it's 40-minute trade. Which I don't think is bad. It's about my average. It's about 40 to about 48 minutes per trade. So happy with that.
Yeah, I think mine are, I mean, it's either, I don't know, 5 minutes to 20 minutes, or hour to hour and a half, or it's 4 hours to 6 hours. That's sort of the 3 split breakdown. Yeah.
Can't imagine being in a trade for 6 hours, mate. I would be ripping my hair out, because I would be like, do something. Why aren't you doing something?
And then I'll take swing trades on like personal accounts as well, which will be multiple days or whatever. So yeah, but no, 6 hours is good. You let it mature. It's like cooking. It's gotta marinate and mature in the pot.
But I mean, the difference is you don't go and check your chicken or your steak while it's marinating to make sure that it's still marinating.
Yeah.
Did somebody climb into my chicken here? Yeah.
Yeah, normally I'm trading all the other stuff like in between. So then I've got some that just sit there with the large. Yeah, right. So I am indeed in Oz, my man. Rabi.
Southern Hemisphere for the win, baby.
That's it. 100%. Yeah, Fabian was asking as well, what part of South Africa are you from?
I'm from Mpumalanga, which is one of the provinces more towards the north, like let's say eastern, northeastern, central section. Like from the central, just slightly east.
Right.
If you know where Gauteng is, or if you know where KwaZulu-Natal is, I'm smack bang in between the two.
I have no idea
Nice and
about
green. Huh?
any of the area inside South Africa. I have no idea. No idea.
You know where Joburg is, or have you heard of Joburg?
Yeah. Joburg, of course. But
I'm about 150 kilometers or so east from Joburg.
oh, okay. Okay, yeah. 150 k's, yeah. Okay.
Yeah.
Yeah. That's helpful then. Yeah. What state? Queensland. Queenslander. Sunshine State.
Do you listen to metal?
On occasion, like selectively.
Do you like Metallica?
Yeah, of course.
They're coming to Brisbane soon, so yeah. Like I
next
think
year?
soon. I'll I saw it yesterday.
Dude, I can't imagine how much those tickets would be. I'm sure they're like ridiculous.
The first time I saw them was in 2006, so that's been many few years ago, and then they came to South Africa, and already back then the tickets were like,
Yeah.
It's like, I can only imagine how much is going to be for the Australian tour, but they're definitely
all the big classic bands, rock bands, everything as well. They've all been doing those like final tours, last gasp type thing.
While they're still relevant.
While they're still able to, I don't know, maneuver a stage, right?
Yeah, like jump around and do their stuff.
Yeah, Camille says $6.50 a ticket. Yeah, that's what I thought.
Yeah, it's gonna be. They're gonna be in Sydney. Like this coming weekend. The November 14th, 16th in Sydney.
Oh, that's real soon then. Yeah, real soon. Yeah. Damn. Yeah, this weekend.
Yeah. And then it's their M72 World Tour. I know this has got nothing to do with trading, but like just because you are in Queensland and whatnot in Brisbane.
Yeah, of course.
I knew I saw it. Maybe you can go and check them if you want to.
Yeah, Metallica I'll definitely visit more regularly. Other times, like more heavier metal stuff is very like occasional, right? But yeah, like Megadeth, Rammstein. Rammstein was really good. Saw them live at Big Day Out here back in the day.
Nice.
That was awesome. They put on a good show.
Yeah, they do. They're pyrotechnic crazy. They're like flame heavy. They love just throwing flames into the air.
Yeah.
I know the lead singer Till Lindemann has been injured while doing his pyrotechnics on stage, like a fair few times, and he just keeps on doing.
Not surprised. Yeah.
Sorry, you were answering a question.
Oh, I was just saying Rufus Du Sol as well, coming back to Australia once again. They are Australian, but they live in the States now. So love Rufus, so good. Wesley's from Cape Town. Hey, 1,300 kilometers from Joburg.
Yeah.
Fair.
The mother city.
Yeah,
Cape Town.
All right. I might just take like a quick 5-10 minute break if that's all good. Gonna grab some. See if I've got like codeine or something. I don't know. The headache. See if that helps. Grab some water. Then I'll see you guys in 5.
Awesome, mate. I'll hold down the fort. All right, guys. Sorry, I just saw that there's a message. I think Samir. Sorry. Let me just quickly check this because this might have something to do with the stream itself. I didn't actually check any of this All right. Okay. Yeah. So we'll have a guest come in soon. So we'll just see whether or not the guest is going to arrive as we expect. Let me quickly have a gander at chat. Sorry, I can't pull up the chat itself. However, we do have Remy in the background, and maybe if he pulls it up quickly while I'm reading it, we can see your questions on the stream. Louis, hey Richard, what's up Louis? Unbiased Trader, hello, how are you my friend? Rahil asking, what strategy do I use? I use a very simple, straightforward support and resistance rejections, effectively. So I like to look for an area of interest, like for argument's sake, a previous high, or a area like for argument's sake, here we have a little bit of consolidation and a struggle to push lower, and then we have a volumetric move out of it, and then eventually we come back to it, and then we have a reaction. I look for reactions like this. What I also like doing is I look for something what I call rally-based rallies and drop-based drops. Those are just areas within a trend where, let's say in this case, here we have, this was Tuesday, this was yesterday. We have consolidation. Oh, I misclicked. We have consolidation, and then eventually we have a break of that consolidation. So consolidation and then a break. This is now the new formation of a trend. So consolidation, new trend. As the trend is pushing lower, the bulls were trying to break this downward trend. They were trying to prevent it from going lower, and then they fail. And when they fail, you have a confirmation of the downward trend. So I look for this. I look for consolidation, a breakout, and then I look for the point where the bulls completely lose. Obviously, with consolidation, it's like an arm wrestle. So the bulls and the bears are constantly like, they're trying to get the arm, one's arm down, the other one's arm down, that kind of like thing. And then eventually one of them loses. So the same idea as a break and retest. So if you could imagine price dwindled lower and then tried to push back in again and then fail through. So it's similar to a break and retest, except that it is, I don't wait for price to get back to this area of consolidation. I look for an area such as this one, and then I would generally try and trade the continuation of, what is this? This is gold. I try and trade the continuation of that downward trend, and then I normally just look for a 1 to 2. It's static stop losses, so that I can align that with my expectancy 100%. So I know if my win rate and my risk to reward is static, even though your win rate was not going to stay static, but if I have those static numbers, I can work out exactly what my expectancy is going to be for every trade that I take. So I know that if I take a trade, it's either going to be a $100 win or a $50 loss, or it's going to be a $100 loss or a $200 win, that kind of like thing. So that's what I look for. I generally also add momentum to my trading. So I want to see price either completely slow down its momentum, like down here, and then I will just mark it as consolidation, and then I will wait for a potential change in the momentum. And I will see that with the candle characteristics. I look for it generally on the 5 and the 15 minute as an example. You can see some clear evidence of consolidation with an attempt to break higher, just back into consolidation, yet again another break, and then a failure to push lower. So this would have also have been an area where I would have looked for a trade, as an example. Didn't, because yesterday was going to... I don't trade gold during the London session. I'm just using it as an example of what I would be looking for. So in general, I like trading out of consolidation, and I like trading out of or into a trend. So that's generally what I look for. Akasi says I'm in an EU buy. TP is 1.159. So EU is starting to show a little bit less desire to push lower. So you see, this would be a very good indication. I know it's hindsight, but it's a good indication. I'm just going to remove this out of the way. This is a good indication of how I would normally trade. So here you have the last attempt to push lower on EU, and then eventually price starts pushing slightly higher. And then when it tries to push lower yet again, it has this massive candle in relation to the wick, and then it starts pushing up. So this is now a potential new long or intraday long direction. So what I would need to see is, for argument's sake, you have the most recent swing, which is down here, be broken, or at least tested in this case. So price tried pushing higher, but the next opportunity that it has to push lower, it fails. And then it shows that it wants to push higher. So there was a potential, even though I wouldn't trade it now, because it is just sideways right now. Euro is just slightly in between 2 points. Even though we did wick lower, there was no follow through. This would be something that I would try and trade up to there as an example. It could have been one to take, but like I said, right now we are absolutely flat. So this was a 15-minute base. I just want to pull it to over there. So you can see that we're when we do break through, we're struggling. So there's no follow through. So I don't know if this is going to try again to push through, or if it's just going to run up to the top. But this is not a trade that I would have been interested in right now. I also do trade a system that I have come up with for myself to help me not overtrade, and it's something I call the best of three. So the idea is that regardless of which assets, I will only trade a maximum of 3 trades a day. Be it whichever comes first, I'm looking for either 2 winners or 2 losers, so the best of 3 outcomes. If I have 1 winner and 1 loss, then I will do a tiebreaker. So I will trade 1 more trade that is according to my setup. If it is a win, then I've made my 2, which is best of 3. I've got my 2 winners, then I'm done for the day. If it is another loss, then I've had 2 losses, then I'm done for the day. So there's only 4 outcomes that I can have for a day. I can have either 2 winners and then I'm done trading. I can have 2 winners and a loss, then I'm done for the day. Or I can have 2 losses and a win, or I can have 2 losses. That's it. And with the way that my best of 3 works out, I know exactly what my expectancy is going to be for that trade. I know exactly how my day can turn out. So if I have 2 wins, I know it will be $50 because it's static take profit and stop loss. This takes into account the commission being taken off of it. So 2 wins and a loss, I'll have $36 as a win. If I have 1 win and 2 losses, I will be $2 down. That's just commission. Don't look at the point, the decimal point. This information here is based on the account size and then the percentage of the account size. So I cannot change the lot size from 0.25 to 0.251. So just kind of assume the 1 at the end is not there. So then I haven't added the rounding to this, but this is what it would be like: $50, $36, $2 into the negative if I have 1 win and 2 losses, and then $27 for a loss for the day. So this is my expectancy. I know that if I have my best of 3, this is exactly how my day is going to turn out. It's either 0.5% up, or it's going to be 0.36% up, or it's going to, or 1% up, sorry, or 0.78%, or I'm going to be slightly break even, take into consideration commission has been taken off, or it's going to be 0.25% down for the day. That's it. Or 0.5%, sorry, down for the day. So that is how I use my sheet, and that's how I look for trades every day. Very rules based, I'm very specific in when I enter a trade, how I manage it. So yeah, just very, very, I wouldn't say robotic, but like very rules based and very to the point. I don't like deviating too far from my plan. If I do deviate, there's always the potential of, if something goes wrong, I don't know what it was that that went wrong if I deviate too much. If there's one or two things that I deviate on and I see it's not working, then I know at least what it is that I'm deviating on that is the problem, and that is the thing that I need to work on. Yes, guys, don't forget to hit that like and subscribe button if you haven't already, guys. Let's see if we can get back to that nice 200 round number for likes. That would be amazing, guys, please. We do this every day. I hope that we're providing you guys with some value. So just, it's free. Hit a like if you do like the content. Even if you don't like the content, hit that like button on. Come on. Let's see. Good guy turned bad guy, Megabot, yeah. Cable moving higher. Let's have a look at GU. We have just broken the Tokyo low yet again. We have the Tokyo high, which is also the London high that we can come and test. We are getting closer to the New York Open, and one thing to just take into consideration is usually if you have a bank holiday like we had yesterday during the New York session, which is the session where the most, which would be the mostly impacted, let's rather say, by a holiday of sorts. You have the dollar and the CAD. So when you have the open now of the New York session and these market players start jumping back into the market again, you could see some unexpected volatility due to the fact that they weren't there yesterday. So they might have missed opportunities, or they could have had trades that just kind of like waited to be entered. So always take in consideration bank holiday. The session that is affected by the bank holiday might have some volatility. Unbiased trader saying we have a significant pullback on NDX. So I haven't really even had a look at NDX all that much since this morning's. So here we had a attempt to push higher, a failure, broke lower, consolidated, continued breaking lower. So this is an area of interest for me as it stands right now. Price is wicking back again. Let's look on the 15 minute. 15 minute, we came into this area down here and have reacted off of it. We slowly made higher highs and higher lows, and then eventually topped out, started pushing lower. Now we have an effective base drop on the 15 minutes. So if price were to come back, I would like to see how it reacts off of this base on the 15. On the 5 minute, it's exactly this small little area of consolidation and attempt to push lower. Probably might be pushing higher because we are a little bit more bearish on the day. Even though yesterday we slowly, well, this was actually quite a nice move going down into this previous area of interest, and then we've slowly been moving up. We've been bullish the whole day with a slight pullback now. We haven't made a new low in relation to the most previous or the most recent low swing. We're quite a bit far away from it. And this candle does look like it wants to attempt to push higher. However, we would need to see the top of this box, this most recent high swing up over here, be broken, closed above, and then continue higher. So you need to see it push above, try and retest it, or do some sort of base candle, and then start printing higher to indicate that it wants to push higher. So as it stands right now, this is an area of area of interest. And then this bottom section is also an area of interest. The only thing at the bottom section that is this bottom area that is a little bit concerning is the fact that we've made a lower low in relation to the previous one, but we haven't broken through. So price can just wick here and start pushing lower because we don't have this idea of price pushes lower, attempts to push higher, and then fails to break lower and then starts pushing higher again, almost like a little bit of a wonky W. Where in this case we've actually had that, and now we're busy with this. So technically we're still within this semi-down range. So obviously not yet. Something to this. But yeah, you guys get the point. So But thanks for that, Unbiased Trader. Really appreciate you having a look at that. Daily candles, 1 hour daily candles are slowing. Mirage Trader, on which pair are we talking? Are we talking gold? Are we talking EU? Actually, I can have a look. Let's have a look at the hourly. Yeah, the hourly is quite slow on gold. The daily, I did say this morning that we've been slowing since yesterday, and we are still within this daily drop-based drop range of mine that I like always reverting back to. We had a reaction off of this rally-based rally, one little wick underneath it, and then we basically printed lower, tried to print lower yet again, failed, and then we started pushing up. But now we are at this area over here where we need to see a reaction. Right now it's slowing down. There is a potential that it might just carry on being slow in this area up until the news on Friday. If we're going to have the potential New York shutdown open up, the government shutdown, I think we're waiting for news. We're possibly waiting for feedback from there. GU on the daily is bearish, and we're still within this downward channel. We've just broken through, and then we've wicked in. So in theory, we should be trying to push lower yet again from this point, depending on how this week ends out, because this is on the daily. We've had 4 daily bullish days, and then now 2 busy printing our second bearish day on the break of a channel, even though this is a very short-term time. It's like the 25th of September, so it's less than a month. No, it's a month, sorry. It's about a month's worth of trading days. So if price is going to start moving lower and respect the channel, then it should theoretically start pushing lower on the daily. Whether we're going to see that begs to be seen. It's all going to depend on what the US market is going to give. Even though the pound is not doing great at the moment, I do think that we do have a little bit more downward pressure. If I had to say bullish or bearish, I would say definitely more bearish sentiment. EU, a little bit less so. We do still have a downward trend, and we are still within this channel, but the bullish momentum is starting to take form quite a bit more. So I don't know if this bottom section down here is the end of what it is that we were, the low point that we were looking for, but only time will tell whether or not we're going to actually start breaking higher, close slightly higher low, and then continue up again. Once again, I trade what I see. I don't speculate. I don't try and predict where the market is going. On the hourly here, yeah, definitely more bullish overall. The opportunities that we have to push lower is back to a singular point, basically. So we're stuck here. We're not breaking lower than this area, because this was the low, this was the retest when we had opportunities yesterday morning. It failed, started pushing, making higher highs in relation to the previous highs. So we're making higher lows in relation to the previous lows as well. Definitely a little bit more bullish sentiment on EU, even though I did take a sell, but that it's because it printed exactly what I wanted. So that's what I would say on that. And then Pooley, great trade, thanks man. Cherry LG or LJ, would you help me with the site you are consulting with when you need to see the options price for indices and other instruments? Thank you. So LJ, when you have an opportunity, mate, you can just have a look at that. Sebastian Leal, in my opinion, the EU is a buy. In the last hour, it has already retraced to the 0.62 to 0.7 Fibonacci retracement level. So now the upward momentum or movement would begin targeting 1.16. I do like buys on EU, to be fair. I do, because we are still we're still in a bullish upward movement since this was Wednesday last week. So since last week Wednesday, we've been printing bullishly, and the opportunities that we've had to try and push lower, it's higher lows in relation to the previous ones and higher highs in relation to the previous one. So if you're just taking this is on the 4 hourly, if you just take the last bullish candle bottom to the current bullish high candle right here, if I just drag it across, these two lines, 0.5, 0.618, and then the 0.718, we've literally just underneath this 0.7 to 0.718 to 0.618, we're literally just there. And now we're printing a bullish candle. So I don't trade Fibonacci's, but I do take note of them. What account size? That says a 5K. Where can we follow you, Rich? Well, normally I do have Instagram, but I haven't posted a single thing on Instagram. I purely got it for the fact that I wanted to follow other people. I wanted to follow people like LJ, The5ers, William, and so on and so forth, and all of the hosts, so that I could, give my support and my love for them. But I myself haven't posted anything on there. Where I'm most active is I have a YouTube channel with William Davis. We have a Discord community as well, which is the Apex Brotherhood live trading. We trade every day, Mondays through to Fridays in the morning session, and then in the afternoons you will get me here on the 5ers. So you either watch this stream with the 5ers and you'll have me, or you go and watch the Apex Brotherhood live stream in the mornings, and then you'll see me there as well. That's generally how you can follow me. I don't really have any other social media. I've never really needed it, to be honest. Then was Henry's comment. The whole doing your streaming. Oh yeah, me and LJ holding hands, doing the streaming together with the accounts. That would be pretty cool. ICT setups. I've never studied ICT, so I can't comment on that. We already checked that one. The DXY is in a bearish zone, so you would expect an upward reaction in the US and GBP. What do you think? So let's look at the DXY. So that's indices, DXY. Here's some old areas that I marked up. Let's see if it's still valid. That was a high that was broken, so I'm not really bothered. What's up, LJ? You back?
We're back, yeah.
Did you find some codeine?
Coffee as well. No, I didn't find codeine, but I just saw Henry's messages as well, because I was going to say I do have a question. But yeah, codeine typically for headache would be overkill, but my head feels like it's been split open. It's
Dude,
not
I
a
can't
normal
believe you're
headache.
still standing.
Hey?
I can't believe you're still standing. If
Yeah,
I
I
ever
don't
hit,
know. I probably just need I need more rest after being in hospital, obviously. But I've got Henry will, was it meloxicam?
meloxicam.
Yeah.
So have you taken it?
Well, that's what I was wondering, because you're not supposed to if you've already taken
There's a time frame.
ibuprofen,
Yeah.
Panamax, Panadol, whatever you want to call it. Any other kind of like aspirin type thing, which I did this morning.
Was it more or less than 8 hours ago?
Yeah, it would have been about 8 hours ago.
So generally, aspirin and stuff like that, I think, has an 8-hour half-life. So in theory, you should be fine. But I would suggest you kind of like just do a quick search, or maybe call a doctor and
Henry
say.
going? Yeah, that's why I was asking Henry. Henry's a nurse, right? So.
Oh crap! Really cool.
Yeah. I was like, where's my nurse at?
Henry,
I need help.
Help your boy, mate.
That's why I was asking before as well. This is
Okay.
obviously like, curious, like, yeah, that kind of stuff.
Yeah. Well,
But yeah,
what's the
out of 10, I'm probably like probably a good 8.5. It's pretty up there, you know.
I can see like you're a bit uncomfortable, but you're not acting as if you are on an 8.5 on the pain scale, mate.
Yeah, it's I take stuff pretty well, you know.
It would seem so, like pretty stoic, mate.
It's just it's like very distracting. You know, you've just got this like thumping thing, and then trying to do stuff, you know. So
I can't remember which day it was. I think it was last week Monday. I spoke to Will about this, but I also on the 5ers stream, I had an absolute cracking headache, mate. Like I had to jump off of stream to just go and do something very unsavory, and then came back again. It was just one of those where it's like, I can't see. I have such a headache. It's just like...
Yeah. I went and tried to like splash my face with water and stuff as well.
Yeah.
I
told Remy, just take me off of screen quickly. I'll be back just now. Bye. You.
He's joking,
I was joking, Remy. Sorry. I was talking about the previous time. I didn't mean you need to take me off screen right now. What were we talking about? We were talking about the DXY is in a bearish zone. So I would expect an upward reaction in the US and pound. What do you think?
Okay.
Do you want to take this one, LJ? The DXY? Or shall I?
I will have a look at DXY. I was just trying to figure out. I was Googling, you know.
Okay, you finish that. I will have a look at the DXY as it stands right now.
Yeah.
I haven't checked the DXY in forever. Okay, so I'm looking for specific areas where a reaction has taken place that was volumetric, strong of some sort. So the most recent one is down here. This is on the 30th, where we've had price trying to push lower, failing, and then absolutely ramping up. So this is one of the, let's call it higher time frame areas to come and pick. Let's see if there is a area of support and resistance from which price could have reacted. We do have basically the smack bang where we are now. We've had establishment of a high, failure to push higher, retest, came back, area of consolidation, breakthrough, jumps around, pushes higher, comes down, tests it, takes up some liquidity, doesn't push higher strongly. Again, another test, 1 or 2, and then we had an absolute breakdown. So we're smack bang in the middle of this area of interest. So this area of interest right now is delayed. So let's look at a closer one. Closer on the hourly, we have this top section over here that was a previous area of interest. So rally, base, and then another rally, touches into it, pushes away, tries again, pushes away, reacts off of it a third time, pushes away, fourth time, pushes away, fifth time, pushes away, and then eventually breaks through. Fails the retest and then continues lower, creates a new retest area, and this is now the latest upper end for us to test. So let's see how this area plays out. So we have one establishment, 1, 2, 3 tests, higher high. So this is basically an ascending flag. Oopsie. So you have something to this regard. You eventually have the break and then push lower. No follow through whatsoever. So this is the lowest point to be tested. Price then starts retracing, pushing back to this area where it broke, which is over here. This is on the hourly still. Price plays around this area, disrespects it, breaks through, pushes below, coming back into an hourly base area, reacts off of it. So this is not an area of interest. It's absolutely been disrespected. So if I pull the whole hourly one and I look through, it's closed above, closed below, closed above. So this is no longer applicable. This area down here was respected. Now let's look at the most recent point before price came down. So that was the wick up over there. Remove this one. This was the last bullish attempt to push higher, which we were close to. Let's look down on the 15-minute. We'll see on the 15-minute, you basically have M. So pushes up, makes a high, pushes lower, fails to make a new high, and starts pushing lower from there. So this is the area where I would like to see price react from. Price came into it, starts pushing bearish. Okay, so most recent structure, here we have another W, basically. So a failure to break lower on this one over here, with this as a support point just below. So what I need to see is I need to see price respect this area down here, start pushing off, and then break through this area where it had a reaction. Because technically you've had the touch and the retest fail. This one didn't even touch the box. It probably can be condensed a little bit better. But you had the failure here, now it's pushing lower. You are still bullish on the day. The daily open. Do we have a gap on trading on MetaTrader? I don't know. Let's just take that as a gap. Yeah, I think this area needs to be respected first, but I do think that we might come and test this if price starts printing lower, making a base, and then printing lower from there. We'll definitely come and test this, but we are technically still slightly bullish. I know it's a very ugly drawing. It's not as good as LJ's. Even though we failed here at the top, the only issue that I have when you saying that you're looking for a buy or the reaction upward is the fact that we've had multiple tests here and failed, and the most recent test ended in quite the drop. And we are slowly pushing higher, and we are showing some bullish structure, higher highs, higher lows. This area is just so strong in the way that it's reacted over the last few days that I would need to see it broken. So obviously this orange box, I would need to see it. I'm saying orange, it's yellow, colorblind. I need to see this broken before I can say that we're going to definitely push higher. I don't know if you agree with that, LJ, but also we are still printing on the higher time frame lower lows as well. If I just go over to the 4-hourly. High point, broke lower, attempted to push higher, failed. A lot of wicks above, a lot of indecision, a lot of failure to really take the new highs, starts pushing lower, a new low. We have yet to make a higher low or higher high in this case. We're still printing a lower high, and we have 3.5 hours left before this 4-hourly candle is closed, and we've already had 2 reasonably strong attempts to push lower. I think we can come and test this again.
I'll show you what I'm seeing,
but I am not sure, mate.
So Dixie, sorry. So earlier on, we had this basically this wedge sort of through yesterday. Then we had that ADP come through, smashed us lower, back down nicely into the support there. We've since then risen back up on the Dixie and just come and tested the underside of that line through there, right? So we had a first sort of relative touch through there, a second touch, we've come right off. I think there's a touch more, basically back into the 200 here. I always quite like that as a retracement point on the 5-minute. From there, I'm, like you were saying as well, I think we get something into there, a slight tick up, and then I do want to see further downside overall. We've had a lot of strength in the dollar for the past number of weeks now since the government has been shut down. That's also been despite a number of the tangential bits of data sort of coming out. which haven't looked that great. It's not sending a good signal for when we finally do get the government open and this data coming through. Most likely it's going to be kind of poor for the dollar. And then the other portion, as I was talking about earlier, and I've said a number of times to you guys now, government being shut down has meant we've had several hundred billion of USD locked up that normally would be otherwise flowing into the market. So obviously that creates a supply glut of dollars. Once you see that coming back through, you'll see as well the FX basically reflect that. So from here, once the government opens, whether it's tonight, it's tomorrow, whenever Trump gets this done, I would say people start to price all of that stuff in now that's confirmed, and we start to see that those dollars flood back into the market gradually, and we start to see a gradual drip feed of dollar coming off, similarly to how we saw it having just kind of this sustained strength the whole time. And now we'll see it sustained drop the other way around. That's kind of what I'm looking for. So that goes back to the Euro piece, where earlier on I was saying I was wanting to see a slightly deeper drop into around 60, or potentially a bit of a nip through there towards 55, 50, and then use that as a base to lean on and then buy up through there. But yeah, I'm definitely net bullish on the euro.
I'm in
where we
agreement.
stopped. Where we stopped yesterday, one, like you were saying earlier, Rich, we had the US bank holiday. This was also where, if you go back to right through here, so start of the month, last 2 weeks, basically where the VWAP came right in. So we pretty much just came up to VWAP, paused there, no liquidity, banking holiday, start to pull back. We got the US coming back in, government potentially opening today or tomorrow. I think we'll start to see this begin to rally.
So do you think that we're more likely than not, we're going to have those tentative information or news events on Friday become actually a reality? That they will release it?
It's hard to say, because there was a possibility that we got inflation this week as well. It doesn't look like it at this point. The main trouble is how good. So obviously they have to collate the data. One, they've got trouble with having enough people there to collect it in the first place, to collate it, get it published, all that kind of thing. So people are going to have to turn up to their desk, put it all together, and get it out in time. I don't know that that's going to happen. The only way I could see that happening is if people have been called in to say, come in now, it's probably going to open, get to work and whatever. But I highly doubt people are going to be coming in. They're like, no, I'm waiting till it opens, because we've said this, last week and the week before and whatever. So, if you're an employee, you're just going to hang around, right? I think it's very much a coin toss of whether people get in there, get it all done. It's really hard to say. I mean,
fair assessment. I also don't want to be jumping in at the last moment and then have to have months worth of information to go through just to kind of dictate it properly and then bring it out and then be forced to do it. Yeah. And then you're going to have that rolling impact of, okay, now we need adjustments, and now the information is not going to be as we initially thought it was because we didn't do our due diligence as we should have. No, I'm inclined to agree with you there, my friend, that if it is going to happen, it will probably only be either the next month and then or the next coming weeks, just so that they can actually have some time to actually get all of that information together and then formulate, publish, and whatnot.
Yeah, they'll definitely smash out in the next couple of days. We could see this stuff next week. It's just they're going to have partial collection stuff of the past data now. Whether they can scrap that together in a day or 2 days, have something out by the end of the week. They'd have to make all sorts of assumptions with portions of it and impute the data. And then so it's whether they go okay, we're just going to be putting out scrappy data.
Yeah, and anyway.
Go ahead and do that. and then focus on the next bit. Or if they go, we'll wait, we'll do it right, release it later, and then we'll see. So,
what is your MACD, please, at UA4? It is a dead simple, just normal, if you don't mind bringing mine up. It's a dead simple MACD. It is called the, I think it's Chris Mooney Ultimate MACD multi-time frame. The only reason I have this multi-time frame one is because of the colors. So it is a dog standard MACD with most of the settings just switched off. That's all. I don't care for the signal line. I don't care for the histogram. I use it as momentum. It's just a very, very quick way for me to see if we have slowing in momentum. I'm a visual person, so I like the idea of simplifying my trading to the point where I don't need to, like, are we having slowing? Are we having, build up? I want to look at the market and I want to see immediately what I want to see. I don't want to spend a lot of time trying to, like, are we not? So I just use it as a momentum indication. I don't use it for its divergences. I don't use it for anything other than just to visually see momentum very quickly. If it's a black line, I know that it's a little bit more bearish than it was in the last 26 candles. If it's blue, then I know it's a little bit more bullish in the last 26 candles, but I also sometimes trade without it. And then I just have a simple EMA as well. It's a 20 EMA that I use as also just kind of like a trend continuation visualization. You see it, it respects it, it hops off of it, it carries on. It's a 1 in 4 basically. So there's 4 ones that I can add. It's a 10, a 20, a 50, and a 200. I generally, sometimes in the morning when I get to the market the first time, I only have the 20 open and just, or not the 20, the 200. Just kind of like see how we've been trading in relation to it over, yesterday to today. And then I'll switch that off again, and then I'll go back onto the 20, and then I will use that for my short term. But like you can see here, sometimes what happens with the 200 is that it gets respected and then a reaction off of it. I don't trade these kind of like bounces and touches, because it can just as easily disrespect this 200 EMA as it would like over here as an example. So price pushed into it, attempted pushing low, and then started pushing up. And then if I decided, I'm going to take my trade right there, if I just looked at the 200 EMA as an example, this would have been a horrible trade. So I don't generally look at the 200. I don't look at price entries off of the EMAs. It is purely a visual aid. But I do like the 20 EMA. It's nice and short term. I get to see enough of the day's movement with the 20 candle. More than happy with that. How do you do charting? Just a quick review. Very, very easy and simple. We'll use this British pound as a quick. What I do is I start on the daily. I look at the daily chart to see if I can see any sort of downward momentum, being a trend following kind of trader. I look for areas where there's convincing evidence that price is either pushing in one direction or it's not pushing at all. So on the daily, I would look for swing points. So I will start, for argument's sake, switch on the on TradingView. You can switch on the magnetize tool, so wherever your cursor is, it will magnetize to the closest data point. I would look for areas such as this where there were swing points. So a swing point being the last time, in this case, upward momentum. This was the highest point, and then we started printing consecutive bearish candles. Technically, this is also one, but I'm taking this one over here just for visual sake. Here is another point, and then also down here is another point where technically price kept pushing lower from these areas. How it moved away, it's another discussion altogether, but just based on this, I'm looking for higher and lower swing points. I'm looking for areas where the price either broke or started to react off of those swing points. So in this case, there's a lower swing point. So this is the higher swing point. It came down, lower swing point, new lower high swing point. This swing point over here gets disrespected. Price closes lower than it, starts pushing up a little bit higher, and then carries on going down. So I'm looking for higher highs, higher lows. Simplest way to look for a trend, look for higher highs, look for higher lows. Once I have basically found these points on the higher time frame, I look for how strongly it reacted from that area. So visually, I don't need to draw the line. I can see where the points are. But what I would do is I would go and I would say, okay, this was the last candle. This daily candle was the last candle where we had upward momentum before we started pushing lower and had sequenced lower lows and lower highs. So I'll mark this area as an area that I can potentially come back to. And then I see how price reacted. We had 3 full days of bearish action after this point, followed by 2 days of bullish and then 2 days of bearish. But if you look at the size of the candles in relation to each other, the downward momentum is very strong in relation to the attempt to go upward momentum. So then what I'll do is I have now identified an area where I've had a strong bearish reaction. I'll go over to the 4 hourly. I go back to that exact point and I try and narrow it down so I can find the exact high or the exact low of that specific time frame on that specific point where it started pushing lower. So obviously on the 4 hourly here we can see that price was struggling ever so slightly to push higher, and then you have this massive candle and wick in relation to the previous candles, and since this point it hasn't even remotely come to close to the top when it tested it. So this candle over here, this big one with the big wick, is a very nice area of resistance. So if I just try and get the whole candle or the whole wick in, then I will break down from that point. I can see that there was some reaction, but I'm looking for the exact time the reaction takes place. I go down to hourly. On the hourly time frame, same area, I see, okay, so this whole candle was probably a news candle. So news candles is like high volatility candles. So they could have gone either way. They could have just pushed up or lower. But what I can see here is that there was no interest in pushing the price higher from this point. So I will then just take into consideration the body as an example of that candle, and I see how price reacts in regards to that candle specifically. So I know that there's many different names for what this is called. It can be a breaker block, it can be a order block. There's so many names for it. For me, it's just a decision point. I don't care what the name is. It's just an area where the bulls, in this case, while attempting to push the price higher, completely lost the fight. Like I explained earlier, it's like arm wrestling, where you have the bulls and the bears constantly being at odds with each other. There's this push from the bulls, then the bears push back, and then it's just this back and forth. And then eventually one of the two loses. One of the two gets overwhelmed. So in this case, the bears overwhelmed the bulls. So then I look for those areas specifically, and then I will mark up these areas based on how that reaction took place, how volumetric it was. Now, if you just look at this is on the hourly chart. This was a news event that started to push the price lower. When we had an opportunity to push higher, when the bulls had an opportunity to push the price higher, they completely failed. But what was followed by this was a volumetric, massive sell-off from this area, from this point up over here. So what I will do is I will then take the last candle and the highest wick point into consideration, because this was the failure point. This was the point where the bulls absolutely lost the plot. The news being one thing, we did try and test, but this was the last testing point before price had a massive drop off, a massive sell-off. And what was it followed by? It was followed by quite a bit of consolidation. So price then pushed lower, and then now indecision followed. After this, you have yet another break. So now this consolidation is once again that back and forth, the arm wrestle with the bulls and the bears. They're at odds. It's an indecision point. We don't know what we want to do until one of the two wins. Now this becomes a new area of interest for me. So this one at the top, where we had the complete failure, is a point of support and resistance for me. This area of consolidation is also an area of support and resistance because there was a reaction here. Now price pushed lower from this point. Then you start going towards the right and you kind of look at areas where price came back to it. So you can think of it as a break and retest. This top one stays active up until it gets tested. It hasn't been tested in a while, so it's still active. It's still going to stay here. But this area of consolidation, if you zoom in and you see the reaction from this area and then a test, there was a test. And then price basically consolidated in the area and then started dropping lower. Yet again, another area of interest is now this area of consolidation, as an example. So that is what I do when I chart up. I look for areas of consolidation, which is characterized by indecision, small sideways action. You're not getting a specific higher highs or higher lows. You have a lot of indecision candles, meaning the bodies are small and the wicks are larger in relation to the candle, and it's over a longer time frame. So you have nice consolidation here, which is very clear to see, but you also have consolidation over here, slightly larger, but still consolidation, and then you start getting trending. So I mark up consolidation areas and I mark up highs and lows. And like I explained, an area like this, where you had a volumetric massive sell-off in relation to the candle, it's the previous candles as an example. So that's what I look for. That's how I chart up. And that's the only stuff I do chart up. What I will do in between is I will sometimes draw a bit of a channel. If I notice that there's 2 points that seem as though they are reacting at a similar point, then I will draw a channel which is just a downward trend. So it just lines up the upper end of the channel and the lower end of the channel between 2 points. And then I just see how it reacts in that regard. And you will see this often. You will see often that eventually it kind of breaks it. Okay, this is a very horribly marked out one, but you see that there's points where eventually it breaks and then price tries to come and test that area where it breaks, as an example. That's how I do my charting. I hope that was concise enough and was easy enough to understand. But that's generally how I do my charting. I'm not like LJ. LJ is Picasso. He can paint for days. He entertains himself with his whole screen. I like simplicity. I like less lines. I like cleaner charts. But it's purely because I struggle with distractions. So if I see a point over here, let's say this area of consolidation up over there, I'm going to be like, but what if this thing is still in play when all I want to see is just this? So the ones that don't get tested, like the ones way up over here, they come into play only once we start pushing bullishly to try and test it. But other than this, they're not on the screen. I don't have a look at them. They're not in my view. I do my charting basically on a day-to-day basis and maybe at most a week, unless there's no area for me to test. If there's no lower low a few months ago for me to test, I don't bother with it. If it's not within a few weeks, I don't care. If it's a few months ago, then obviously what's the likelihood of there still being traders sitting there? What's the likelihood of there still being liquidity in that area? I don't know, so I don't bother. I don't bother looking at those turnaround points, basically. How's it, mate?
I bet I'm waiting for it to kick in. I don't know how long this is going to take, but still not great.
Oh, mate. Headaches suck. It's crippling.
Yeah, it's not fun. Like I said, it's like one of those, I don't know, it's just there like thumping whilst you're trying to stay focused. But
it's like a constant reminder.
Yeah. Yeah, it's like Chinese water torture or whatever, you know.
Yeah, it's like that one droplet. Okay.
Yeah. Roop, my man. So can you please elaborate the risk on, risk off sentiment right now? Right now, the dollar index is neutral, but at the same time, Aussie New Zealand dollar shows strongness, and at the same time, euro pound weakness and yen weakness. So yeah, I assume when you say like AUD NZD, we're saying AUD and then NZD, not like AUD/NZD. We did have the risk on sentiment last week very much in play. So Aussie dollar got whacked, New Zealand dollar got whacked, dollar yen was back and forth. That's because of that dollar component. But if you looked at the other yen pairs, particularly stuff like Aussie yen, New Zealand dollar yen, they also got smashed, right? Risk on, risk off regarding the euro is a bit more neutrally footed. And the euro dollar, put it that way, tends to have a slight risk off pull, right? So it'll actually head higher, only marginally. It's only a marginal influence, but net in a risk off environment. Then with the pound, it's got its own idiosyncratic things going on right now, which is obviously the budget coming up. So that's going to have the heavier weighting of the pull. The risk off sentiment last week was basically just due to the tech sell-off and people having a little mini panic attack about AI, whether that's a bubble or not a bubble, and the circular financing and everything going on. We had Michael Burry and such, shorting Nvidia, shorting Palantir, that kind of thing. So it kicked up that sort of thing in the media. That was coming off last week off the back of all the tech earnings. We've had that all come through, so that's all been digested. People take some profit, a couple fears in the headlines. Now we come right back around. So back to our risk on right now. So that's why we're up. There you go.
Nice.
Yeah, as far as interpreting risk on, risk off, don't take the yen so heavily, because the yen is influenced so much right now by, again, idiosyncratic effects from Japan, both from the new prime minister, the central bank direction, right? So that carry trade is dominating risk on, risk off altogether. That's why yen keeps devaluing across the board. And you've seen typically the yen and the franc are very similar, both that traditional risk off pair. The yen has fallen out of favor in recent times because of that negative carry. So you'll tend to see the franc appreciate. And right now we've seen dollar franc also come up. So we're very much moving back to that risk on environment. That's also in part helped by getting closer to the shutdown ending. Some of the data has been sort of mixed. Obviously, we've been missing the majority of the US data. And then we also did have the Fed announcing they're stopping QT, right? So they're stopping the tightening, going to leave the balance sheet where it is, which means more liquidity for the market, whilst at the same time, the intent to continue cutting rates. So there you go. Same onset of action, 30 to 60 minutes. Okay. Should be kicking in sometime then.
Have you ever had a migraine, mate?
Have I ever?
Yeah, have you ever had a migraine? Like headache times 10.
Yeah, I used to get them when I was younger, right?
Have you ever gotten them to the point where you couldn't ingest anything? You would just it just comes out?
Yeah. Like I used to be at home from school all the time.
Did you used to? Did you used to do the suppository version?
No, wait, what? You're just griefing me now. No, look, Henry was saying orally, right? Because I guess I assume you can, get it like injected or something, Melixicam. So I didn't pick up on that at all.
Yeah, that's why I was like, orally, right?
Some dude saying try Exogen. I have no idea what Exogen is. But
If you guys can get it there with you guys, I don't know.
yeah, no idea. We're pretty good here. Like, I mean, stuff will be controlled, right? You know, description, that kind of thing. But I don't know what Exogen is. Am I being trolled again? I assume I am.
I don't know. USD CAD is going to be an interesting one. What do you think?
Dollar CAD. So yeah, dollar CAD. We were talking about dollar CAD before. I don't really like it where we are. We're kind of in like a very neutral base. We're in the middle of like the top end to the bottom end of that range. And as far as the top side target, we've sort of met the objective. There's a shoulder way to the left. At the bottom of that wick kind of area. I think there's a touch higher, a little bit further left. Yeah.
Is it this one?
No, just below. So the bottom, after we pulled back from that top, yeah. So that's the higher trading range through there. Then obviously you can see just to the right of that, you know, we fell through it and then started pulling off. So we've sort of met that objective target now, and we've pulled back and we're just sitting in the middle. So I don't really like dollar CAD overall. What I was saying before, obviously we've retraced 50% of the move now. So you could see a small tick up, but then from there, I'd probably either step aside. That or else you're taking like a coin flip up or down at the minute. It's gonna depend heavily on the direction for the dollar. And like we were saying earlier, kind of seeing dollar weakness. So that said, dollar CAD has been doing a bit of its own stuff for the past couple of months because of the differences with the tariff situation. Keeps going back and forth in Canada right now.
I mean, it's been having like real drop off and real gain days. Just like if it's running, it's running. But now we're kind of like stuck. Indecision.
Yeah, exactly. Yeah.
So this should follow either a complete like tank, or we should see a complete run up.
Yeah, I've definitely got the lean that it will be a slight tick up and then right back down. But I'd rather wait to see that move starting to play out before, you know, trying to get in somewhere here. Like getting in here is just coin flip. So,
agreed.
how you doing?
Hello, guys.
Going strong? Going well, man.
Hello, guys. How are you guys?
Going well. How's trades today?
Quite good. I missed the GU sell, unfortunately, which ran very nicely. But so now I'm just sitting on my hands, making sure I don't do anything that I shouldn't be doing.
Yeah, fair. Yeah, I've liked the movement today. It's been pretty right. I missed all the stuff earlier today, but looking at it, looked really good.
Let me show you
the dollar yen moves and that kind of stuff. Yeah.
So I had this marked out, and I decided to sit it out because GU was just sending up here. So this is the big zone that I would sell off. Price came in quite a bit, and I didn't want to sell yet because the stop loss would have been a bit too big. But then it ended up just falling so hard, unfortunately. And my dollar bias was in line as well. I expected to go higher here still, take these highs out. But I obviously don't want to enter GU now because the move seems to be done. So yeah, that was kind of the trade. Pretty simple.
Yeah, easy, nice. I like it. Next move. So, do you reckon still more height for Dixie, or is that it?
Yeah, I feel like we'll still go up. We haven't gone up much. I just feel like GBP itself is quite weak. EU hasn't done much compared to GU, so there's a lot of potential for more upside, in my opinion.
Interesting. Fair. Yeah, pound is just We were saying before, dude. Pound is just in the
weakness,
bin lately.
Yeah, it's not been strong.
Getting slammed constantly. So
You can see on this chart here, on Euro GBP, I kind of use this to see the difference. I'll get a bias on Euro GBP, and if I am bullish, then I expect Euro to be stronger. If I am bearish, I expect GBP to be stronger that day. So that's kind of what I did here as well, and it played nicely, to be fair. That's why I was leaning into those GU cells more rather than EU.
yeah, I like that. I did that often. Same deal with like Aussie dollar, New Zealand dollar. Yeah, same deal. I like that. It's really good.
Nice.
I might have to say bye, guys. I've been around for many hours today, and I probably just need to get some rest. To be fair,
You earned your supper, my friend.
yeah, that is a good point. I need to have some dinner first as well. So I'm going to do that. Try to get to bed early today, and then I will see you guys tomorrow. So,
Thanks, LJ, for joining me and keeping me company, mate. You go rest up. We'll see you
Take care,
tomorrow.
LJ.
Take care, LJ.
No, guys. See you tomorrow.
Bye bye.
And then
Rich.
it's the three of
Rich
us.
and Aaron.
How are you
Yes.
guys?
Good, man. How's the stream been?
I'm good. What
The
about
stream-
you?
Wow, we've got Victor as well. Good day, Victor.
Hey.
Victor, the man, the master man, he's here.
Hello,
man-
hello.
the myth-
The quasi
Hello.
guy.
How's everyone doing? Thank you for that interesting introduction, guys. How are you two, you three doing? Rich, Aaron, Samir, everyone watching. How are you guys doing today?
Doing really good. Had
We
a
are good.
nice long trading day today. Streaming in the morning and streaming again in the afternoon. One of my favorite portions of the day is the streaming. I got a very, very nice trade on my new live account on EU. I got a sell on EU, so I'm happy with that. So yeah, it's been a good day overall.
And are you still in that trade? Short?
No,
EU?
it's played out. It has played out.
Okay.
I see my screen has stopped sharing. I can reshare again.
Another
and
thing
then-
interesting to ask is this trade on the account that you are doing the project, where you're going to be sharing the stats and all of that? Yes. Okay. Perfect.
100%.
All right. So, how many trading days do you have now on that account or that project?
So this was the very first trade of the account. So I
Congratulations.
got it last week, Sunday. The whole of last week didn't really present me with good trading opportunities. There was also some admin things outside of trading that kind of like drew my attention away from trading. But I took one trade today. It's the first one for the account. So hopefully I'll start building all of the evidence for the live trading with the coming weeks. So yeah, very
Nice.
first trade. Yeah,
That's-
it was
that's, Go ahead.
it was a 0.25% risk trade, and I ended up taking 0.34%, somewhere around there on the trade. So
Nice.
this was the very first trade. This is a 5K, so half of
Is
them.
this your screen? Yes, it is. Okay, but
Yes.
where did you get in? Where did you get out?
So this, if I can.
the trade below. Okay, understand.
Yeah, so this green box over here was just an area of interest. This was my entry point. We had a lower high on this morning. I'll start with this. So we had this is EU. We had this lower high and a failure to attempt to break higher. Oh, sorry, this is on the 15. I need to be on the 5. There we go. We failed to produce a new high based on Tokyo's high, basically. So we just wicked at the top, started moving lower, attempted to push higher yet again. We failed. We started to break lower than the most recent low swing point. We had the bottom of Tokyo, which was as an area of interest for me, where I was more inclined to see EU try and take the Tokyo low as an example, because we already had one test of it from yesterday. So I waited for a drop, a base, and then a drop, exactly in line with my strategy. I entered, I got in a little bit later than I was supposed to, because I don't know, because it's a brand new account, I didn't click the disclaimer. You know, once you enter a trade, it gives you that disclaimer and say, "Are you sure?" So
Confirmation pop up.
yeah, the confirmation. So that one was a little bit delayed. My entry point was 115.774, and then it started riding lower. I then took this area of interest where there was a little bit of consolidation. You'll see this little area on the bottom end of Tokyo was an area of consolidation. We started really struggling. We wick into it, we struggle, we push off of it, we're really struggling. And then I said, you know what, being the first trade, I am going to close this one out if we reach the absolute bottom of Tokyo, this bottom wick. So I just literally just closed it there, but my take profit was down here at 1567, which would have been exactly 1%, or not 1%, would have been exactly 2 RR trade based on my stop loss up over here on 15824. Entry point was exactly where I wanted to be. I just closed a little bit earlier, but that was due to the fact that we had such slowed, and the wicks, like specifically, if we just look at the wicks were really struggling. It was really struggling to print lower, and when it eventually started to push lower, I didn't know if it was going to follow through and completely break through this previous swing. So I just decided that's where I'll close. And the moment I closed, it started pulling back, and I thought, yeah, made the right decision. And then it just absolutely tanked through again. Took my where my original TP was, and since then, this has now been the new area of interest, basically. So price reacted off of it, tested it yet again, and has been going higher since.
Nice.
But only the one trade for today. It's a $17.25 trade. 1% is $50 on this account. So it is a 0.38 gain on the day, which I'm very happy for.
Good. Congratulations. And this process is, by the way, nice breakdown of price action, feeling, where the confidence goes away, where you say, well, it starts getting a little bit uncertain what is going to happen because price action isn't giving me any indication to think one way or the other. So I'm going to take the safe option and take the trade away or close the trade. Great there. But is this the process that you normally do? I mean, the flow, the consideration, the whole thing. Is this how you manage normally your trades as well, or is this a specific kind of way, specifically for this account because of the project?
So the idea that I had was I wanted to trade this account the exact same way that I would trade my normal accounts, my personal accounts, as well as my prop firm accounts. Mm-hmm. Because it's the idea of consistency. I wanted to show consistency. I wanted to show the idea that the account size doesn't matter. Just that if you have a rule set that has been tested and has been deemed profitable, and if you keep to that rule set, you should be able to pass an account, as an example. That was the whole idea of it. Normally, I would leave it to either hit TP or I would leave it to hit stop loss. So it's a set and forget. I've got the exact data set that I use for my normal trading, I'm using for this as well. So I have a trade copier also hooked up to my other prop firm account. So I'm going to be sharing the same trades across them if I need to. So the idea is I want to take trades that's 100% in line with how I would normally trade. That's it.
So what is the difference with your normal strategy?
Just the amount of risk.
Oh, but the logic, the entry level, the management.
The entry logic is exactly the same.
The risk reward profile, the win rate will be all the same.
Yes, everything would be as I've tested it for my normal strategy. There's small differences.
Okay.
Like for argument's sake, I might not necessarily trade this one to the same volatility, to the same lot size and the same volumes. Mm-hmm. And there's some trades that I would take on my normal accounts that I'm not going to take here. And it's It's purely for the idea of keeping my edge with myself. So
that's very generous of you to take us with you on this journey. Like going, it's one thing to show a couple of trades. We all do that. Where we enter, why we enter, how we managed it, why we got out, just like you explained. That's what we do here. But to take it to another level, where you take us by the hand, so to speak, and go, we go step by step in the whole process and seeing the stats. That's very good, man. Very generous of you. I'm sure that the audience will appreciate that very much.
There was
Aaron,
somebody that asked if we can copy the trades, and I was like, I wouldn't.
Yeah.
I honestly wouldn't, but I cannot stop anybody from copying trades. But I would strongly advise you not to.
Yeah, well, there's actually, for those who are thinking, no one is watching, I'm going to copy him. I see Rich has profitability. It's easy to copy. I believe in his setup as well. I'm going to copy him. When he enters, I enter as well, and all of those things. And you think no one is watching, think again. The majority of prop firms, and the 5ers is no different than that, collaboration between traders is not allowed, right? So you're not supposed to be group trading, never, right? So if you do that, both of you, I think both of them will be flagged by the system. The system will recognize you have the same. There is like, I suppose I don't have the insights, but I mean, they surely have some models, some algorithm that will flag you automatically, and you'll be in breach of the terms and conditions, because you're doing something that is not allowed, right? So you don't want to do that, right? You want to be a trader on your own, not copying anyone. And if you think you can get away with it, think again. You don't want to be risking your whole account because you like Richard's style and things like that. Take away the concept, take away the good stuff, but don't copy like a photocopier, right? Adapt it to your system and use it, perhaps all the considerations, the things, but don't take the trades exactly like he does.
Yeah, you'll screw yourself over in the long run, and you'll screw me over in the long run as well. So it's the concepts that we're trying to teach, not the actual trades. I'm doing just the trades for the sake of transparency, to show that it is possible. You can, if you follow a specific rule set, but the rule set itself is going to be dependent on the individual and their trading style. So, if...
Go ahead,
yes?
Sorry.
No, you can carry on.
No, I wasn't sure you finished, but there's Mario here. I just mentioned that group trading is not allowed, right? So you're not supposed to be trading together the same strategy, whether it's automated, whether it's manual. That's not allowed. You should check the terms and condition of the prop firm. But copy trading your own trades is allowed. I don't know if Mario Walter here thinks that are mixing these two things together, mixing them up, but it is allowed. Yeah, so you are allowed to trade on the 5ers, copy your own trades, not someone else's, your own trades into multiple accounts. There is, however, a limitation on the bootcamp account. You can only apply a strategy on one account, not on all three. You're allowed to have three, but only one strategy per bootcamp account. But the high stick account doesn't have that limitation. The hyper growth account doesn't have that limitation. So basically, you could, with that exception, copy all your trades to all the different programs, except that little bootcamp exception. So yeah, that just wanted to point that out for Mario and everyone else who was thinking, hey, I'm not allowed to be copying. I'm copying already. Will I get in trouble? No, you won't.
Yeah, that's good information, especially if somebody is considering getting different accounts with the intention of trading multiple different terminals on one strategy. That's very good information. Yeah, I think just my intention, I think, was just to show you can gain profitability with consistency and following very specific rules. And the idea is not necessarily to have people copy the trades, but like I said, I have no control over other people's actions. So I would caution people against it, because I know what it is that I'm risking, and I know exactly why I'm risking what I'm risking. So I know when I'm supposed to close my trade. I know when I'm supposed to try and cut my risk, when to put up risk, where somebody else might not necessarily have that information. And let's say it happens that you copy one of my trades and you decide to go full margin, as an example, which is not a good strategy, first and foremost. And then it goes against you. You're going to be angry at me and you're going to blame me, but you're the one that decided to take the trade. You're the one decided to copy. So that's why I say I caution highly against copying someone else's trades.
Yeah, totally so. I totally agree. Not only that, but in reality, it's going to be very, very difficult for you to have no slippage, not slippage in execution in the sense of the broker, executing your trades, but slippage between two strategies or two traders. That's also called slippage, right? Where there's a lag, and that lag creates a difference or a slippage, right? You're not copying one to one because you're not a robot and you're not connected to the trade. So you may miss, the winners and only be able to. And actually, I advise against copying, because I think it doesn't really help you long term. You don't want to be a person like that. I think that's not only that, but the edge. That was the point I was trying to make. The edge. A lot of the times, if you have a little delay in your entry or your exits, could have a major impact long term on the edge. And if someone sees one thing and they get out right before something breaks down or breaks out, and you didn't see that, you didn't catch that move because you're waiting to see whoever you're copying to, that they're no longer in that trade, that can be a huge difference, right? Someone getting out right before news, you don't know that, and you get a complete opposite result from what they got. It totally, the edge is, edge is quite difficult to get and maintain in the market. And if you think you're going to be doing that on secondhand, right, on secondhand information, it's even more difficult. So I totally advise against it. To be fair and unbiased trader. By the way, thank you for your engagement on Biased Trader. We do see you being very engaged with our stream, and we appreciate that. So keep those questions coming. Asking the same question we had before. Will thinking of getting a small high stake 2-step account for scalping, will this conflict with my bootcamp 100K? I'm not sure if you mean copying. If you mean copying, no, it will not. And if you're not copying, then there's really nothing to worry about, because you can do whatever with each account. They will not conflict any other way. The only way is considering copying, but between bootcamp accounts, that's not allowed. But between high stakes and bootcamp, you're perfectly fine. You're not in violation in any rule at the The5ers. All right.
Yeah, thank you for that. I'm going to love and leave you guys. Thank you for showing the interest in my trading journey. Everybody that was in chat today, really appreciate the conversation points and the questions and so on. And thank you for being so kind. Those of you that have had nice things to say, please, if you don't mind, just please drop a like for us. And if you haven't subscribed, subscribe. We are 600 subscribers away from hitting that 90K mark. Sorry, not 60K, 90K mark. It is going to be a pretty awesome stream the day we have the 90K subscribers, because there's a lot of giveaways. There's a whole theme around it. So if you guys want to be a part of that milestone with the The5ers, please subscribe and drop a like. And I'll see everybody again tomorrow. Aaron, Samir, Victor, I hope you guys have an amazing day, and I hope that the market is very kind to you all. That's me. I'm out.
Goodbye,
Very,
Richard.
very generous
Right.
of you with your
Take care,
great wishes.
Mr. Richard.
All right, guys. Cheers. Have a good one. Bye.
Bye bye.
Bye-bye. Bye-bye.
Aaron, we don't share stream as often, and so I totally want to know and interact and have show the audience your thoughts and your ideas, your approach, and engage with you and expose you in a positive way. I mean,
Yeah.
have exposure to you by the audience. Or expose you to the audience, I should say, so they get to know the value that you bring to these streams. So how have you been?
I've been good, trading wise as well. I had a very good week last week.
Really?
Won 3 out of 3 trades, and one of them I passed a 50k count with. So I added some funding. And yeah, unfortunately,
50K, you said?
yeah, 50k, 50k count I passed.
Perfect.
Unfortunately, I missed a trade today that I wanted to take on it, which would have gotten me payout, but it is what it is. But so far, so good. I'm also in some EU sales right now.
Okay.
If you want to show my screen, maybe I can show the people.
Yes, let's do that. You're not the only one, by the way.
Oh.
I'm talking about Peter. Peter here, who knows how I trade, and I know exactly what Peter did and why. At least I think I do. By reading this, he's also had a trigger short here on EU. But go ahead.
So my biggest reason for this trade is the dollar at the moment. I'm very convinced that it's going to take these highs out, which is this line. And it's pushing very nicely at the moment. But the one thing I do not like about this trade is the fact that euro is so strong, which you can indicate by using the pair euro GBP. You can see that it's gone up quite a good amount today, and I would want it to start retracing off this high because it's also a weekly high. So maybe we can start going down now. Maybe EU will rest a bit, and then ourselves can play. And then the setup on EU is this. I'll just mark it out. Big zone again. Caught an entry around here. So I'm just holding, hoping we break below these lows. And once we do, I'll probably go break even. And if we don't break below the lows and end up closing as a sweep, so like this candle, for example, I might just cut the trade because I don't like trading against sweeps against me. So yeah, that's really it, to be honest. A very simple trade.
I like how you're using the EG or Euro Pound as an indicator as to your strength. Have you been using that a very long time? Because I don't. Okay, and do you check because EG, right, Euro Pound, if it moves, it could be the euro, it could be pound. Do you double check that the pound isn't the one moving the pair?
I'll just check what my bias is on it and just stick to it, and then I'll go off that. So today, for example, EU was bullish in my opinion, which I saw through EG. I mean euro itself, sorry, not EU, not euro USD. And I wanted to sell GU then today, which, as you can see, played very well. Sold off nicely so far. We've gone down a good 35 pips at the moment. And then EU's kind of been stuck. It's done 10 pips down now. So that's kind of a big difference. So that would have supported, that would have helped me to pick the right pair. And today it showed that clearly G was the right pair. So yeah, it's a very useful thing in my opinion. Most of the times it works, but your bias can also be wrong, and then it doesn't matter, right?
True.
So
have you? I haven't looked into it, but have you tried out the Euro index the same way we have the Dixie for the same application?
The 6E1 or
no, I mean that's the euro dollar future, I think. What I mean is perhaps let me check where I have it. I don't use it, to be fair. It's EXY. If you the ticker EXY.
EXY.
Y, not J.
Oh, sorry. Yeah.
No problem.
Um,
So you can that's the same way as the dollar. I don't know all the details because I don't use it, but I
Yeah.
suppose it's the same way. It's a basket of euro against different pairs, and you're measuring the not the dollar strength, but the euro strength in this case. It's not as on the lower time frame. If you go to the 1 minute, for example, it doesn't look great,
yeah.
and
Yeah.
that's the reason why. First reason that I didn't want to use it. I never thought about using it. But that could be interesting as well. Yeah, I like it. I like it a lot. We are using different indicators or different things as
Yeah.
indicators to assess the probabilities of one thing, right? One direction. How likely is it that yours is going to continue to push it down or up or whatever? I like that. I like that a lot.
Yeah, it's just very simple to then avoid losses, in my opinion. Because if something doesn't correlate, you just don't trade. And to be honest, reducing the amount you trade is very good. I know some people might not like hearing that, but if you trade every day, it's a bit, not every day is a trading day, in my opinion. So these are rules that really hold me back from clicking the button every day.
Yeah, I totally going for quality, not for quantity. I totally agree. Whether or not it's going to be every day or not depends on the frequency of the strategy.
Yeah.
But sure, I totally would agree to that. I think a common mistake. Samir, you have this as well, right? Where you consciously are not in a rush to get into the trade because you want to be
Yeah, exactly.
and picky about your trades.
Yeah, you are absolutely right. But I will, confess with our audience. Sometimes I do make mistakes. Sometimes I see a perfect setup and it is not in my time window. I still take it. And guess what? Most of the time it is a loss. So I still make mistake, but I try to, I try to minimalize or maybe make less mistakes. But again, sometimes, let's say some circumstances, let's say I'm on a winning streak, then my emotions, my mindset is in a different state, then I might feel invincible, like I'm going to win the next trade also. Of course, market is going to, make you humble in certain way. But I'm just trying to explain to our audience like how these emotions works as a human. No matter I have secured whatever amounts in payouts, but the point that I'm trying to make is sometimes I do go off the track and I do take here and there trades, but my plan is entering the trade after NYSE open. This is my exact plan. And I know if I follow the plan to the T, I get most of my wins in this particular time window. And I'm not afraid to admit that sometimes I do break my plan. I'm still on the journey to make less mistakes. Of course, I still make mistakes because day before yesterday, I took a trade on gold on live stream. Actually, it was before NYSE.
I remember.
And I lost the trade.
Okay.
Yeah.
Yeah.
I know it was a part of there was a trendline break or whatever I see on the charts, but only one thing was not there, which was my time. And guess what? It was a loss. I know I'm at the point, these small mistakes doesn't really bother me that much, doesn't really hurt my account that much. But the point that I'm trying to make is try to make the mistake that you can manage in the next couple of trades. Okay, you have the rooms in your accounts, so you can learn from my mistake. Our audience, our viewers, that mistakes are gonna happen regardless of wherever you are in the journey. But try to make kind of a manageable mistake. You should not over risk, like you don't even have the chance to execute your next trade. Like on gold, I took a loss actually. And I switched my bias on US 30. Yesterday, I was planning for sells on that. But based on the candle closure, if you can show my screen, maybe I can explain our viewers. But yeah.
Yes.
All right. So the gold trade, what was not in my plan was the timing. And rest of that, it was a part of my plan. But still, I broke my plan because of the timing thing. I still executed the same trade on US30. I know I was planning for sells, but looking at the 30-minute closure, it was very strong close. So even if we 15-minute, it was a very strong close, and we rejected from this area and this EMA. It was really, giving me signs of a bullish move. So I got to the 1 minute. I just traded the trend line breakout. Very simple. I just traded this trend line breakout, and my stop loss was 5-minute EMA, which was this. It was under 30 points. I still remember. Okay. And I was targeting 1-to-1. I did recover my loss. My position size on gold was less because I knew it was not my time to trade, but I still saw the setup, and I tried to, give it a chance. And it was again on my different account. So the point that I'm trying to make, the thing that I want to show our viewers or tell our viewers is that just make mistakes are going to be there, but just make sure that mistake is manageable, like I managed in this US30 trade. Then I put in my actual risk on it, which was 1.5%. So I know I risk 1%, but sometimes I do risk 1.5. I have mentioned a couple of times in stream also. So I made some profit from this trade, took on my 5ers account, and So try not to break your plan. Of course, you're gonna make mistakes, but try to make less mistakes. That is the point.
Yeah, 100%
Again,
agree. Mistakes are
Yeah.
going to be there, 100%. Regardless, even if you trade 10 years, you might make mistakes that you
Exactly.
shouldn't be making. So it's never going to
It
be
was a very
perfect
silly mistake if I, look behind. If that is not my time to trade, why am I,
in a trade.
try to,
Yeah.
it is a very common sense. It was, I don't know, but still I made a mistake. I'm not afraid to admit to you guys. So, but yeah, I managed it in the next trade. So that is how you should also do. Make a mistake, it's okay. But, you should not do these practices like risking your whole account, by considering this gambling thing. You just over leveraging, over risking, and you're over trading. You're just putting trades on trades, buying accounts and accounts, are repeating the same mistake. That is not going to reward you. So I think you got my point. What
Yeah.
I'm trying to explain. Yeah.
I can definitely agree with this because in August I had a period where I really wanted to pass a phase 2 that I was on, and I started just forcing trades, and I ended up blowing the account after a week of just forcing trades. And then I bought a new challenge, did the same thing because I was annoyed, and then I blew the account again.
Yeah.
So it's definitely something that you learn from, but it's
Exactly.
a costly mistake, So try and minimize your mistakes, like Samir said, and it won't cost you.
Certainly, it's and there no one is gonna call you out on it. I mean, the prop firms don't
Yeah.
mind you blow that account,
Yeah.
100%.
of course.
Exactly.
So, and there's no one watching us normally, right? I mean, when we're streaming, right, you have audience, but I mean, when you're trading alone, no one is gonna say you, well, what are you doing? Why are you not learning from your mistakes? It's all about it's all up to us to recognize that we're in a bad pattern and do our best to identify it by journaling, think about how we can break that pattern, and actually break it by taking action, by putting better habits in place, or putting limits, putting measures that will stop us from, I don't know, taking too much risk or too many trades. Where the discussion started, Aaron, where you started saying taking too much trade is a real thing that could hamper your growth and your profitability as a trader. There's someone who asked, or not asked, but told us, unbiased trader, that my mic isn't as strong as normal. I increased it a little bit. I don't know if you can hear me now better. Was it? Yeah, it was that one. Do you guys hear me well? I mean, Aaron, Samir?
Yeah.
Yeah.
I can hear you perfectly
It's good.
fine.
It's like always. Yeah.
All right, so I think maybe it's incident with specific viewers, perhaps.
Yeah.
This analysis played out really well yesterday. We discussed it on the stream. Simple Fibonacci price pulling back, making higher highs and higher lows. If you see this particular leg right from here to here, very simple analysis. If anyone from the viewers took the advantage of this move, congratulations to you guys. But today, let's see what market does. Victor, you say very often, like We are observers. We react to the market, whatever it does. Yesterday was really a good example. Like I was saying, this order block is good for sales, but the way price was closing, above this area and retesting type of thing, and you just observe the market and then you react to it. You are not stubborn, like, okay, I want to sell from this order block. That is all, putting 100% risk on this one. So that is really good point you make very often. So, yesterday was a day where I did the same. Let's see what today we're gonna get.
I think it's a good thing. I mean, just like science, basically, science does it over years and decades, where science in any given moment has certain statements which are believed to be truth, but it's based on the available data. And in the future, perhaps we will understand things better by having new data, new research that will give us new insights. And we might then, what we previously thought as being truth, now has to be adjusted, because now we have more information that it's not exactly that way. It's slightly different, and this happens all the time in science. And I think of trading the same way. Like when you are at any given moment, the decision you're going to be taking are based on the available data. But that data, meaning price action, in my case, that information, that data might change in the future. Meaning you need to be flexible in your trading ideas to accommodate information when it changes, because that's what they refer, at least that's what I interpret as when people refer to marrying your bias. You shouldn't do that, marrying your trade. You should be flexible into recognizing what the price is doing, and when it stops doing or it tells you the opposite, to take corrective actions, whether that is do not take the trade, or perhaps abort it, or perhaps, I don't know, whatever it is that your plan tells you should be doing in those specific situation. But you should be flexible, and I think that's what you're referring to, Samir, where
exactly.
wanted to short from a certain structural level or area, but the new information when price was reaching that area told you that it doesn't make sense. It's not behaving as it should or it would if it's going to react. Sellers are not coming in, and if they're not, then why would price go lower? If sellers are not coming in, then it's going to continue and break that structure and continue to the upside.
Exactly. So you took any trade today? You was involved in any market today?
I was watching GU, which didn't trigger, and I'll tell you guys what. Go ahead. Maybe you can look it at as well. But I was looking at the on the lower time frames, and I was looking for, but there wasn't any entry order block to begin with. Maybe I should, for visuals, switch to mine. Let me do that, if that's okay with you, Samir.
Yeah.
So we have on the H4, without doing the complete top-down analysis all the way from the monthly, considering the weekly and so on, we were in a bullish order block, which is this one. However, even while we are in a demand zone, which is what it is, if we have a fresh bearish structure, because it is bearish, I understand that that this has a little bit more potency because it's fresh. It's what the market in the last few candles was dealing with, and it makes it a little bit. It makes it relevant in so much so that we can take the trade even if it is against the previous structure, which was this order block. So it was an outside bar on H4, and on the 2 hour you can see that we have actually on the 1 hour we have an order block which wasn't retesting. That's the reason why it didn't trigger me on the H1, but on the H2 it did, right? So I was looking for I did have enough information or enough overlap in order to look for a trade. Let me mark this. there. Let me take that off. So when if we go to the 5 minute, the quasi would be, let me indicate it. It would be this. As the uptrend that was then broken, neckline broken, and comes back above the 50% retracement line. However, as you can see to the left on the 5 minute, and this was true on all the other time frames as well, there wasn't any entry order block on the quasi. So this reversal happened, but there wasn't any way I could get in with my trade. That's one thing. And on EU, I am in a trade, and I'll tell you guys the reason. Perhaps it's same. Peter knows the reason. He a good member viewer of our stream, knows, recognizes. I know exactly what he means because we, we've been talking on the stream, and we discuss these setups regularly. So we have the H4 as well. Without looking into the daily, if you quickly go to the daily, there is a structure there that's interesting. That's going to be interesting if we get there in the future. But currently, there isn't anything on the daily to work with. We do have a quasi. I'm not sure if you guys can see that. There is a quasi in here. It's not the biggest quasi, so it's an internal. The bigger quasi is the one we have all the way down here. And there's a quasi there as well, meaning, I'm going to tell you guys, maybe I do it quick, but most of the time people say I take too long for the analysis. So maybe let's do a little quick for, so this is the quasi. Actually, the quasi is down there as well. Let me double click it. Right, so you have the there, and if your rules don't consider that to be the structural low, then it doesn't change the analysis or the setup, but it becomes the same thing. It depends on how you define the left shoulder. Both of them to me are valid. This one as well. This is the bigger reversal pattern, and that reversal pattern currently gives us one entry. I talked about this entry order block. I think it was Monday or so, where yes, I think Monday. I think it was. The order block wasn't above, or in this case below, visually below, but beyond that 50% retracement yet. But because of that push we had, that increased the range of the whole structure, the whole quasi, and that now included it as a possible entry order block. So I'm very interested in price on the H4 when it gets there to see how it reacts, how it behaves. And there is a daily fresh order block above it, which I like as well. So maybe it will retest and have a wick that goes all the way down there. That would be perfect. Having multiple things or structures telling me that this is a place where buyers could be getting in, and if actually buyers do get in, I can have high certainty and confidence in that trade. So that's one thing, but that's the bigger quasi. There is, however, a internal, as I call it, internal quasi, which is also a reversal pattern in that since we have the bullish impulse, and that one is there isn't, as you can see on the H4, there isn't any other structure other than the one that is within the daily fresh order block. So that becomes, these are the two entry areas of interest to me. The one below, as long as it doesn't eliminate that daily structure, that's a great area for, it's so squeezed, it's so in the extreme, that would be great. But even this one, if price reacts accordingly, I would definitely be taking that trade if it presents and triggers. So that's one thing. So on the buy side, I'm looking for this area, this one and that one, to start building the case long. But in the interim, we do have a fresh bearish H4 order block that was created. Yeah, that is an outside bar, which is stronger than the engulfing. So that's definitely something you want to be paying attention to. And there is that H1, H2. H1 didn't get triggered. See that? The H1 didn't get triggered. But if I get to the lower time frame, I did have the quasi right here. Very simple. Nothing out of the ordinary. That will be the left shoulder, at least for me. Yep, there. That's the quasi, that's the head, breaking of that neckline. It goes all the way down here and it comes back. But from the quasi on the left side, it failed. There wasn't an area. I have it here, a positive entry, but actually there isn't. This is another time frame, another 5. I need to change it. But it didn't actually get to the area. That's one thing. So it didn't trigger me because of this order block, which is, I suppose, a 3-minute. Yes, so it's not a 5, but a 3. You get the point. So that's the 5. That's the 3. I mean, didn't get to it, so I didn't get a trigger from that. However, as this area has the overlap, and it just allows me to look for other. So either the reversal, the quasi, is built by the bigger structure, which is this. Right, so you get a reversal including this whole thing as the quasi, right? The quasi like so, and coming back to retrace, or you get a new structure, a new quasi within after it touches the area of interest, right? So that's how I looked for my entries, and you can see that on the 5-minute we had a beautiful reaction as well. Let's take a look, and I'll show you. This is, simple in many ways. It is on the 3-minute. Again, here you can see it. So the quasi is formed by the following. There you go. This will be the left shoulder. There will be the head, breaking of the neckline. It goes one time. You got a reaction, a big reaction. You may or may not have been triggered by then, and then perhaps you had a second chance. You may or may not be triggered by the second one as well, and that's where I get into these trades.
Victor, sorry for interrupting you there. I have a question. I've noticed on your pair list that you have the same pair like 3 times. Why is that? Is it different brokers or?
That's a very good question, Aaron. Thank you for your keen eyesight right there, and attention to detail. I like that. Yes. The thing is, since I trade the whole system, well, not the whole system, but a big part of the system is based on order blocks and quasis, and these are based on the OHLC data on the price, meaning the open, the high, the low, and the close. They create these order blocks. That means that there are some times where you have, let's say, a doji candle, where the body is, the same where it opened, for example. And when I'm in doubt, when there's like a borderline case, I'm not sure if this is supposed to be an order block or not, because there's slight information. And then I need to take the consensus, so to speak. So I will then check. I have an uneven number of price feed that I will then go and see what is the majority of the price feeds telling us. Is it visible on, the majority of the price feed? If it is, then I've tested this. If it is, then it's a green light for me to actually take the trade. Consider, and not take the trade, consider the structure to be present enough in enough price feeds for it to be relevant for price action. Because if it's only visible, the idea is if it's only visible in one price feed, then perhaps other trades are not going to be reacting to it, and then it's going to be not as strong, or perhaps even not good.
Yeah, not high probability. Yeah, okay.
Exactly.
Interesting. I've never seen that before, to be honest. I've never seen anyone do that.
So I only use it in the case of, especially if you're on the lower time frames, or on doji candles, you tend to have that. The same thing as to if, for example, since my rules are precise to the pipette, meaning if it is 1 pipette beyond, it will change everything, because I will just decide not to consider as a certain thing.
Right.
So, and because it's so precise, or the precision is important, I need to have multiple price feed, and that's the reason I have 3. Sometimes I in the past I used to even use 5 as a number and check all 5 of them, and only accept it is at least 3 of them are showing the same pattern on the charts.
Right, and you also have like data on this, right? Or
Yes.
through trading itself. Okay, that's sick. Okay, and that shows that it works, right? The data.
Yes, Yes, from what I measured, when it's only visible on one, the win rate goes down.
Right.
As simple as that. And when it is shown on every or the majority of them, or on more than at least the majority, the win rate goes up. So basically, there's palpable, tangible proof to me, at least in my data, that it needs to be visible on not just on one price feed. And normally, an engulfing or an outside bar or a quasi, if it's clear, it's going to be visible on all price feeds. That's not a thing. But there are these borderline situation where a pip here or there could make the difference in the the conclusions you get out of price action.
Right. Hey, sick.
And at the same time, I'm seeing you both, like Aaron explained his strategy, and Victor, you are big on quasis, and we have other mentors also in our live stream. It's really fascinating how everyone sees charts differently and everyone has their own terminology. I believe every profitable trader in the world see charts on their own in their own way. So it's really fascinating. If I was thinking about it when you guys was talking about it, like everyone sees the chart differently. They might have different confluences. Of course, not 100% same, but they are different again, kind of vice versa. So everyone has their own thing. It is really fascinating, every profitable trader.
Yeah.
What do you think about it?
Yeah, I agree. To be honest, there's a lot of people that try to follow you, like the person that they're learning from, for example. Exactly.
Aaron, before you continue, please continue. However, I'm gonna switch my camera, but I will be listening in the background. I'll be right back.
Yeah, no worries.
All right.
So what I was saying was that a lot of people try to copy a trader exactly and be like them. But I feel like once you learn the concepts that you want to learn and you get your data, you can trade however you want and it will work.
Yeah, exactly.
So I definitely agree with that. I mean, we both don't trade the same and we're both profitable. So exactly like you said, you don't need to do the same thing to be profitable traders at all.
There might be a few concepts which are same, but
Yeah.
I think nobody's gonna see the charts the same way. So
100%.
if you are thinking, our viewers, you can copy someone or you can buy a strategy or whatever. So I'm just giving you a hard truth here. It is not gonna work out. You have to put in the time. You have to give the hours. I don't even know how much hours I've put in the chart work.
Yeah, who knows?
So I am trading from 6 years. So I think we all goes, from this phase.
Yeah.
So
100%.
it is not gonna come easy. Again, you have to give the chart time. You have to see the live market happening, your setups, in the live market, showing up every day. All these things counts. And let's say you're learning from Victor or Aaron, and you might can take little piece from them, and you can use it in your own trading. And it is just you have to put in the work.
100%.
Okay, Victor's USD trade is good. You are in EU sales, right?
Yeah.
All right.
Currently in the EU cells. If we end up sweeping this low in the next 6 minutes, I'll close the trade for a bit of profit because it's against my rule to be in that. Simply because it's the same time frame that I'm in on. So if a confluence is against it, I'd rather cut it. Also, the fact that this trade is not the highest probability for me, because GU was a trade that I wanted to take. It ran already. So now me still taking EU is something that I should not be doing when it comes to taking the right trades. But I took this on an account that is not too important to me. So that's how I trade as well. I have multiple accounts, and then on some of them, I'll take a trade that is not the highest probability, and on the others, I'll make sure I always take the ones that are the best for me, which you'll never have a perfect trade, but this is definitely
that's why
set up for me.
You really mentioned a point that I'm really big on. Like you mentioned, a perfect trade.
Yeah.
So what I have done, I have just, I used to play stop losses, very tight, or maybe not giving enough space for the price to move. So considering the thing, we are not going to get the perfect entry. I try to keep my stop loss very wide. I target less now.
Yeah.
And I think it gives me good win rate, and my mind is really good. I know if this levels doesn't hold, then my trade is completely invalidated.
Right.
Sometimes, let's say you take a buy here, you put a stop loss here. Sometimes price do liquidate it and still moves in your favor.
Yeah.
I give extra room to my trade. Let's say I keep below the 200. It is way too far. Let's use 15 minutes. Okay, let's say I keep the stop loss below this 200 EMA, which is the last worst case scenario. If price, even take this liquidity, then I still, give it a little bit room. Maybe 200 retest can take place. So that's how I trade nowadays. I give extra room to my charts. I think, guys, if you're not profitable, just add this one thing. Keep your stop losses at a very logical place and give a little bit extra room. Maybe you can target less. If you're targeting 1 to 3, you can go for 1 to 1.5, maybe 1 to 2s.
Yeah, very good advice.
I think this can change your trading, in my opinion.
Yeah, this is very good advice, to be honest. I used to try and get trades with 4 pip stop losses and stuff. And for me, it just doesn't work. I kind of have big stop losses now. This zone is quite big. Let's see, from my entry on, I have a 11 pip stop loss on EU. That's really not bad.
Victor, Rich can show your screen.
Yeah.
And then you can explain our viewers.
Yeah.
Yeah, let me get that. Aaron.
But a 12 pip stop loss, for example, is really not big. But a 4 pip is just too tight. Like, your trade needs some space, Okay, there we are. So this zone, you would initially enter here, right? This would be your initial entry for my setup, which is an 18 pip zone, but I would not enter here. I don't like entering at Asia low for a sell. So I'd wait for a deeper push in, which we got. Entered around here, stop loss here, and target a 1R. So we are at TP, but I am going to wait these next 2 minutes. And if it does sweep it, then I'll just close it for whatever profit we're in. If it doesn't, if it breaks, I'll just put my stop break even and let it ride a bit. But I usually target a 1-to-1 or a 1.5. And that's kind of changed it for me. My win rate's gone up, and it's just better for my mental, because if I lose like 4 or 5 times in a row, I kind of get very frustrated, which it sometimes does happen still right now. But I feel like if I was to lose like 10 times in a row, it would not work for me. I'd lose my head. So I kind of adjusted that into my strategy and made sure that I trade with proper targets and give it some time, so my win rate's a bit higher as well.
Yeah, even you mentioned about risk to reward thing. I still remember in 2022, I passed my first challenge. I was targeting 1 to 1.5 risk to reward. I was not aiming for big risk to rewards. And with this, I have stayed consistent for 5 to 6 months with that similar account, live account. I remember it was a $20,000 from a farm. So just add this one thing in your trading. Use a logical stop loss and a little bit extra room you can give to your stop loss. I think that can maybe make a little bit difference in your trading career. Nowadays, I have very sloppy entries here and there sometimes. Victor trade quasis and all. You have to enter on specific areas. But if I talk about my system, I have little bit sloppy entry here and there. I can sacrifice my risk reward maybe little bit here and there, because my stop loss is very logical and it have extra room. So I don't really care about these risk to rewards, because I know there is a high chance that move is gonna be in my favor because I'm giving extra room to my stop loss. And my analogy is this: I want to end a day maybe in slightly profitable, in some profits. Of course, I'm not stubborn in it. I know there are losing periods. Just for the example I'm giving you guys.
I closed the position. Go ahead.
I'm seeing your charts here in the small screen.
Go ahead.
Yeah, that's it. My point is just use the wider stop loss. I think your trading journey will be smoother and you will have a little bit more wins than you're having nowadays, and stick to that for maybe an year or two. I'm definitely sure you're going to see some changes in your trading if you're just following those small stop losses, and if you're targeting the big 1 to 5s, 1 to 10s, and you're not seeing any result. Try trading this way. Okay, wherever the price is going, like, let me give you an example. Okay, okay, my chart is not here. Victor, can you put in my chart, or maybe?
Yes.
Okay, the point that I'm trying to make here is, let's use the 5-minute chart. So I'm a big on the recent structure that market is printing. So I'm gonna use this structure in the reference of my example. Okay, price is going up. So now you just have to take the buy only. And what entry criteria you can use any criteria. You can use trendline breakout. You can use a retest of certain area. You can use liquidity concepts. You can use an EMA test. Whatever concept that you want to use, you can use it. Just use a logical wide stopper. Let's say you waited for a liquidity move right here and you see some rejections. You can use a wider stop loss, maybe below this 200 EMA on the 15-minute, as you can see. So you have a really good room for your trade, and even if you are targeting 1-to-1, it is okay. I think if you're a beginner and if you haven't seen a result from trading, try trading this way, and maybe after 3 months, 4 months, come back to the stream. Let me know how it goes. I'm pretty sure you're gonna see some changes in your trading if you trade this way. Don't be accurate, just placing your stop loss at just catching 1 to 100. Don't be that guy. I know you see on Instagram. Even I used to see that. I used to be like, oh, I also want to do that. I know it plays with your mind when you see, but try trading this way. I think you will see good results, and I'm sure you will get at least 60% win rate in this, and with the 1-to-1s, even 60%, you are profitable. Okay, so try this. It is better than losing, in my opinion. You will lose less in this way.
100%. And then if you can manage to figure out what trades you shouldn't be taking with this added to it, your win rate can go even higher.
Exactly.
Something that I applied is, once I started going for 1-to-1s and 1-to-1.5s and 1-to-2s, I looked at my losses and checked if I should have even taken a trade. And you'll see that there's a few you shouldn't have taken. Now, if you get rid of those losses, you'll see that you would have been in a good amount of profit. So yeah, it's a lot of, you got to work on it, but if you get it, it's very nice.
Yes, we have plenty of questions, but
it's a lot of journaling though, but boring work, but it has to be done, right?
Exactly.
I think you as a
I cut my EU trade, by the way, guys. I decided to close it. I was up 2% because I risked 2%. I hit a 1-to-1. I decided to close it, and I made 1.6%, which is not bad. But I'm glad I closed. So
yeah, it's good.
Good decision.
At least you made a win, yeah.
Yeah, and I
that is the same thing. So. Yeah.
Yeah, I was gonna say you mentioned
doesn't
something,
look like
Aaron.
It's gonna provide, to be honest. It looks quite choppy on the 1 hour now, since we've swept the same low 3 times now, and we've kind of got a reason to go up as well for me. So it looks a little confusing on the 1 hour now. I don't know if we're gonna go up or down. The dollar has swept the market structure high, so I do see a dumping potentially for a bit. It might just disrespect it and keep going up, but it's too much risk to take right now. So I'm just leaving the trade and moving on to the next one.
How is my voice? You guys, can you guys hear me?
Yeah, it's fine.
Okay, perfect. I was gonna say,
it's not a bad trade, I'd say. Just very bummed about the fact I didn't take GU. GU played very nicely, and is still playing. So yeah,
GU was a trade for today.
Yeah, it definitely was. At least I caught something right. So
I I think
It's nice
you
to see
mentioned
the
something,
biases play. I
Aaron.
don't know
I
if
think
you guys are in any trades. I don't believe you are. But
Can you hear Victor?
I think Aaron, you can't hear me, right? Can
I
you?
cannot hear him. No, I don't know if he's speaking.
Yeah, I thought so. I'm gonna come back because probably that's what happened. I'm gonna log in and log.
Maybe Aaron can't hear you, Victor. No, I can't hear him. No.
Can you guys hear it? The chat? Can you hear Victor? Maybe Aaron can't hear you, Victor. Okay, chat is hearing. Try turning on that live offstage feed. I don't know.
I have that on again. I put it off and on again.
But that's only if I'm outside.
Still
Yeah,
can't.
exactly.
No.
Yeah, I'm gonna
cannot hear you.
I'm gonna. Yeah, I thought so. I had that impression that Aaron wasn't able to hear me. I'm gonna come back and.
Yeah. Okay. Yeah.
Just 1 minute.
Yeah. Sure. And when is the best time to do a break event? What do you mean by break event?
A break event.
Break even? You wanna
Oh, that's what he means. I assume. Yeah.
break even? Okay. I don't put my trades at break even. From the day one, I don't really have this habit, so I think I have grown with that only as a trader. I don't know about you.
I do put my stop loss at break even, but only once I've reached my target. And if I want to try and catch more.
Yeah, if I'm very close to the target, then only I do this. Other than that, I don't really do it.
Yeah.
I haven't really. I think from the day one, I've been starting seeing this guy who was big on taking the targets, not being afraid to take a loss. So I think that's how I started my journey. So if your name is Moba Sir, if 60.69 whatever, so if you started your journey that way, by seeing some mentors who are encouraging you to place your stop losses at break even, I think that is somewhere you hold throughout your trading journey is gonna stay in your mind. I think you should mold your trading system in that way where break evens are there, or maybe trading stop losses. I know some guys who trail stop losses. I know some guys who put your stop loss at break even after 1 to 2. So you have to choose what you are comfortable in and just go with it. Everybody has their own way of doing things, as you can see in the live stream itself. Adding trade his own way, Victor has his own way, and our other mentors having their own ways. Even I trade with different strategies. So I think everything is fine. So just choose your way.
Sound check.
Yes, I can hear you, Victor.
Okay, perfect.
Thank
I
God.
had that impression that I wasn't getting through into you. I
I'm
said,
sorry.
well, it can happen.
Yeah.
But yes, before I was gonna say that we have a couple of questions in the chat that I think we should start looking at, and I'm gonna point a couple of them on the screen. But before we do so, guys, everyone watching, we're doing this for you, to help you to, we're sharing our mistakes we did, the things we learned in our journey becoming profitable, things we are still learning. We're not perfect, we're just in the same journey, getting better. Once you get to profitability, it doesn't stop. You still have to keep on working on yourself and your trade, your edge, and so on. But the point I'm trying to make is that if you appreciate, and if you like, and if you want us to keep doing this, there is something you can do to make sure that we do so. And that is by liking this stream and subscribing to the channel. We are ever so close to getting to that 90K milestone, and with 90K we promised a big, massive giveaway for you. So you have a chance at winning accounts totally. No, they're giveaways, right? They're totally free for you to win. But we have to reach that milestone, and then the faster we get it, the better it is for you. So the better you are, the better chances you have, or the faster you'll have that chance at winning any of these accounts. So I'm gonna.
And by the way, guys,
go ahead.
One last thing. By the way, guys, this Friday we have our scalping session for our Indian audience. So if you're from India and you're watching a live stream, make sure you are subscribed to our Indian YouTube channel, and you are in our Indian Telegram channel. So you can just write on YouTube, The5ers India. You will find our channel. It is the official channel. And there, this Friday, we are doing a webinar. I'll be seeing you there.
What time is it?
Yeah, you can.
Will it be at?
It is 5:30 Indian Standard Time, 5:30 p.m. Indian Standard Time. Yeah, on Friday, it's gonna be on scalping. If you guys are big into scalping, that session can really help you. I have tried
Nice.
multiple strategies. I have received results from multiple strategies. So I think I can cover that topic in a very well manner. So see you guys there. Make sure you are subscribed to our Indian channel, okay? Now you can
Awesome.
take over, Victor. Yeah.
Yes, as you can see, those who are watching us right now, as you can see, the 5ers is working relentlessly to cater to you in every language possible. Well, not every language, but we are working, expanding these languages. We started with English, this one, but we have the Portuguese channel. We have the Hindi channel since not so very long ago, and who knows what the team is working on. I'm not going to be spilling the beans on for future channel, future options for different part of the world, different languages. The only reason a prop firm is going to be interested in investing so much effort, resources, because it takes people to build and organize and maintain these activities and structures in community. It is for the reason that the 5ers needs you to become as good as you can be, because that's how we earn. The 5ers earns their profit, right? It is you trading and becoming funded, becoming a great trader, so that they can connect you to the pooled account, right? It's a different. The 5ers, we do things differently than the plain vanilla prop firm. I mean, not for nothing, we're a pioneer in the industry. So our interest is aligned with yours. We want you to become better, and that's why the 5ers invest so much in building everything around it, education and events to teach you, to help you, sessions like these. Where we show real traders, authentic, as much as possible, so you can understand, realistically what trading is about. Not some fluffy, social media kind of imagery, which is not realistic, and it's not going to help you, because you're going to be comparing to someone who is not even realistically doing that. So
we have a question from Good5148. Okay, I want to understand how to buy a 5ers account with USDT, get payouts, file taxation, etc. Everything. Please tell me what's your workflow, how do you buy, sell, etc. I think for crypto, you can use any exchange, and when it comes to buying the account, you have plenty of options, like you can use your credit card, debit card. It should be Visa and MasterCard. In India, I know we have RuPay card. It doesn't work, so Visa, MasterCard only. If you want to do cryptos, you can buy from any exchange, and you can scan that QR when you are purchasing the account. It gives you two options. It is very easy. It is very step-by-step process. If you want any help, then our official Telegram or you can text there, and then our team will be ready to help you. And you want to know, Forex is in a gray area. Actually, with 5ers, you are trading CFDs, okay? It's just contract for difference. You are not really trading the Forex, and you are giving kind of a service. So it's not really illegal trading this way in India. So the prop firms are giving you that way to trade Forex legally in India. How? Because you are not really putting your money in your own broker. So that's how prop firm is the way to trade in India, in my opinion. I have bought by Binance. Yeah, you can do the same. If you have any question regarding this, you can type it here, or you can just use our official Telegram. You can chat with our team there. We will be helping you there. Even I myself am active there. So if you're not a part of it, I highly recommend you to join that.
Good stuff.
Yeah,
Aaron,
now you can take over,
the
definitely.
market is changed direction very quickly.
Yep.
And that is something that happens all the time. The market tricks us into thinking one thing and does the another thing. How do you handle when your trade is going against you, as when you're already in the trade, it goes against you. You have your trade management triggering you to cut the trade, but then suddenly it just continues and goes the original direction which you entered for and continues to go. How does it make you feel, and how do you deal with that as to not regret FOMO or all those things we should not be doing?
To be honest, I just know that doing what I do with this stuff works long term rather than just one trade. So sometimes it's gonna be wrong, right? Sometimes I'm gonna cut the trade and it will run, but I know that most of the times it does go back to my stop loss, so it doesn't make me feel much. I'm still happy I followed my plan, because if I was still in this, it wouldn't make sense. So that's all that matters. And it is moving nicely, but I would have TP'd around here. So I didn't miss out on much profit either. I missed out on like 0.4%, which doesn't affect me at all. So yeah.
I'm gonna switch to my screen so you guys can. Actually, there is no screen from mine. So because of course I went out and in, so I gotta put my screen back on. Hold on, that was a bit funny of my me doing that.
J
All right,
trade.
so
They
I'm gonna go back to the screen. Go ahead, Samir.
Our Indian traders are still having doubt. You are not trading. Do the research on CFD. You are trading kind of a CFD. It's contract for difference. So, you'll get to know about all these things. I cannot cover, a big thing in this live stream. And I'm sure, search CFD. You are trading CFD here. So it's not really a big deal. So you will know. Okay. Now you can take over.
Perfect. This is exactly what we were talking about, Aaron and I, where I'm not sure where Aaron got in. I think you got in somewhere in here. I got in later, but it doesn't matter.
Yeah.
The point is, we had a reason. We got triggered. We got into the trade. Price was moving quite nicely in our favor, right? That's easy to hold the trade when that happens.
Yeah.
But then the market does all kinds of things all the time. And this, if this is because of emotion, then it's not good, right? If the trade plan tells you to just wait for the TP or the stop loss to be hit, and you get scared and get out of the trade because of emotion, fear, you're risking too much, you want to get that payout, or whatever external factor that have nothing to do with trading, that triggers you, then that's not good. But if your strategy, if your trade plan, based on the data, based on what Aaron was talking about, he knows. He said the majority of the time that this happens, I have measured. You didn't actually say them in those words, but that's what I understood behind those words. That you have evidence, you have measured the times that you get out when a certain thing happens.
Yeah.
You abort the trade or you cut the trade, and you know that you're doing something that is, given large numbers, is beneficial to you. It adds to your profitability. And yes, sometimes, like perhaps this time, you didn't catch more profit, but in the long run, you know that the times that this happens, that you're letting money on the table is less, or it's not the majority of the time, it's the minority. The majority of the time you're actually getting profits instead of getting stopped out later on. So you're basically doing the same thing. You're cutting the trade short before TP, but depending on why you're doing it, if you have a evidence-based process that tells you to cut it there, right? Because it's part of your trade plan, part of your rules of trade management, then it makes a whole world of difference.
Yeah.
One,
100%.
you are in control, and the other one, you are at the mercy of your emotions. And yes, it will happen. It will happen. I asked that very question specifically because that's exactly what happened here to me as well, right? I got a reason to get out, right? I got a bearish order block that was then overshadowed, so to speak, with a bullish outside bar. That's a strong bullish sign, and I have measured that. And in those cases, it is a wise thing to just cut the
Yeah.
trade short, because the market is doing that for a reason. It's telling you that the buyers are coming in with a certain amount of interest. That diminishes the probability that the market will go to your TP. It will go to your TP in a certain number of cases. It's not 100%, but it shouldn't be doing this. It shouldn't be going this bullishly, making these outside bars against you and pushing all the way with this the way it was doing. So I too closed it, and I mentioned it in the stream. And afterwards the market does what you initially thought. It went to the order block, as you can see there. Beautiful retest of that order block. Look at that pin bar, and with that wick, it pins the order block and then moves away. That's the supply zone. So it still follows the price action assessment, but this is a safe abort or safe cut from the trade, because you're not allowing the market to develop against you. Yes, you will cut a lot of trades short that might have gone to the TP, but you have to measure. Actually, don't take my word or Aaron's word or anyone's word for it. Measure if this would give you a better profitability in the long run, not on one trade or two or three, but in the long run, on a month, 3 months, 6 months. Applying this kind of rules as trade management in your trading, does it increase your win rate? Does it increase your profitability and absolute terms in R multiples, in expectancy, so divided by the number of trades you're taking, and all of those good statistical measures you can do on profitability. But this is the kind of things that happens to all of us.
Yeah.
You apply your strategy, and it does something you wanted it to do, but you're not part of it anymore. Don't be fooled that it's a wrong thing necessarily. It depends on how you came up to that action.
Yeah, 100%. I do have to say, I will be cutting now, guys. It was a very fun stream. Hopefully you guys catch some trades today, but I am gonna head out. So take care, everyone. Bye, Samir. Bye.
Take care, Aaron. It was very
Nice
nice. Yeah, having you here.
I'll
Take
see
care.
you guys next
Likewise,
time.
Aaron. It's great having you here, and we wish you to join us soon again, so we can chat some more and get to know you better and understand and get more gold nuggets from you, basically.
100%. All right. Take care, guys.
Take
See ya.
care, guys.
Take care.
Take care, Aaron.
Bye.
Okay.
Bye.
HK118 has a good question. Would you like to cover it?
Let me check where it is.
One pair. One pair
yes,
can improve the
okay.
trading. What do you think?
I think yes. But specifically in a certain way. It depends on the where you are in your trading, because there's a moment where being selective is what you want to be doing, and there's a moment to expand as well, or there's a phase in your trading career where expanding is what you actually need to do. If you are still learning about trading in general, but about price action and about your own strategy, you're building data, you're collecting data, you shouldn't be expanding into all kinds of dozens of pairs necessarily. Unless you are a swing trader, then perhaps you need that because of the trade frequency. But otherwise, you want to focus on ideally just one pair and get to know everything you need to know about your system applying to one pair, because that brings consistency. Because between different pairs, there's slightly different way they behave. Like the spread is differently, the impulsiveness is differently, how they behave in different time in sessions is differently. It might be nuances here and there, but there's slight variability that you're incorporating into your data. And by keeping it one set, or not one set, one pair, you're already normalizing or standardizing the pair, the range, for example, the volatility. Each one has different profile, and I certainly think it is a great thing to focus on being a specialist before you expand into other field area asset and even other strategies. Make sure you have one thing that is profitable, one pair where you have all the data that supports it before you start expanding into other things or other strategy, other pairs and things like that. That's my opinion on it.
Yeah, even I was very stubborn. I was having very stubborn nature. I was trading every pair, and a lot of good traders. Even my friends who are doing good in trading, I met them through Instagram, and became a friend. So they advised me trading one pair, and at that particular time, even now, I think they was trading one pair, which was gold. I was too stubborn to believe that, why I need to trade one pair. I was too, stuck there. I was not open to trying that thing. So when I tried trading these two pairs that I'm mainly focusing on, NAS 100 US30, it gave me the most consistent results. So if you ask me, try trading, 1 to 2 pairs for 6 months, 8 months. And the advice that I gave you, of course, try trading with bigger stop losses, little bit less risk to reward. It is okay, you can give you extra room for your stop loss. Of course, the trade should be logical. You should not be, trading, illogical trades, trading random. Just get your strategy in place, make some rules and focus on that. The thing that you can add is one thing that Victor just mentioned, trade 1 or 2 pairs. And the other thing that I just mentioned a couple of minutes ago, which was have little bit bigger stop loss. As a beginner, it is okay. You can target a little bit less. Put this thing in your trading for maybe next 6 to 8 months. Let me know how it goes. I'm sure it is gonna be in your favor only. It's gonna be going in your favor only, and your trading is gonna be better. I have tried it, tested it. I passed my first challenge that way. So
nice. Focusing on doing one thing well, as good as you can before moving on to other things or expanding it, depth over distance, so to speak. Someone asked about gold. Someone very, very, interested in gold. Let's do that. Let's take a look. Samir is joining us in a short while. In the meantime, we will be continuing. I think Samir had some connectivity issue right there, so he'll be joining us in a little while. We have on the H4 for gold. Actually, let's do it from the higher time frames. What do you guys say? So on the monthly time frame, we'll break it down. Higher time frame, there isn't anything to trade from, right? The last structure is all the way down here. It's not relative for or relevant for price action. For a setup right now, there isn't anything. There is one big wick. That's interesting, but that's nothing I can trade from the monthly, at least. That just tells me a little bit information about the reaction price had when we hit it. But the monthly is a short. The short structure is way below, and on the weekly time frame, we don't have anything from this point. Even going that way, there wasn't any order block that was created, and we don't have anything in the leg to the left as well. So basically, there isn't any structure for us to be working with. There isn't a quasi, there isn't a fresh order block. So it's still something too early to use the monthly, right? It takes more time before it produces the structures that we can then trade. On the, however, you can already see that we are 2 days away, 3 if you count this day, to create a bullish weekly order block, which would then be a great area to be trading from if we come back later on for the continuation. Hasn't happened yet, so we can't use it. So basically, there isn't anything on the monthly or the weekly that would be able to trade, at least not yet. On the daily time frame, we had a beautiful reaction, which is this, the creation of the engulfing comes back to that order block and moves away. I only took it to the next level, as we discussed that on the stream before. But it does continue sometimes, and in this case, it continues to a lot more profit, which is just fine. It's not mine. Remember, my system tells me to take this trade up to this level, and that's it. Whatever happens afterwards, it's not my business. It's not my trade. It's someone else's. So we only have one structure, and that has been retested already, and it's no longer active and proposing any structures or opportunity for us so far. So the daily doesn't give us anything as well on the H4. And let's take a look at that. Oh, there. So once we broke the level, right, which was based on this line, this yellow line is based on the monthly, if I'm not mistaken, not the monthly. When was it? A weekly? Let me check. The close on that is 1284, and let me double check what is this line. No, that was something else. It was perhaps the daily, not even. I'm not sure what line it is, as you can see, but it is based on, actually, yeah, not sure what it is, but I think it must be something. Let me double check that. No, it can't be that, so it must be. Yeah, I'm not sure. Well, anyways, we'll perhaps I will figure out what it is. The order, what we're seeing here on the H4 is that we have a fresh order block that was retested. Fresh order block in the direction of the trend of the impulse. In any case, was created, came back to retest it. Yes, there is a fresh order block there as well. So it's nice. I haven't put it in, but there is two structures that are pushing the tug of war, pushing in opposite direction. The H4 comes back and does its thing, and by creating that engulfing, it kind of confirms it. It retests that order block even another time. So if you didn't get a chance to get in on the first one, you had it on the second time. On the H2, there wasn't a reason to be in the trade or to look for a trade at that moment, but we can see here that we had plenty of reasons. Let me double check this. This would be, it's not a quasi. No, it's not a quasi at all, not in this time frame, but we did have, I didn't trade this, but we did have that reaction, which would have been, if I had to be trading this pair, I would be looking for this as one of the areas where you have overlap of the H1 and H4 order block. Based on this already, you have enough reasons to take that. So without the new H4 order block that was created, that's even afterwards. And if you go there, let's take a look if it triggered or not. Let me take a look. So this was on at the end at 10 o'clock. After 10 o'clock, then we need to be looking for possible entry when price comes back, and did price come back into that area. So the quasi would be this. On the 1 minute, it wouldn't have triggered me. On the 2 minute, it would have triggered me. No, it wouldn't have triggered me either. Almost. No, it wouldn't have triggered me in this case. As I can see here, no. Right, but the idea is the same. Actually, there isn't an order block on the, there isn't a quasi. Yes, it is in here, and you can see it on the H2. All right, so this is what I'm talking about. The quasi, established downtrend, goes all the way to the highest point, and you can see how price comes back to that outside bar and moves out of it. Perfect, beautiful. My rules wouldn't have gotten me in, but still this would have been a great setup to trade. I only get triggered on a number of quasis, not all of them, but still the movement, the impulsive move that is created, that is the basis of the quasi, right? When it comes back, it still holds true, comes back to that H1 order block, and even if I didn't get triggered, it still move in the not the right direction. There is no right or wrong, but in the direction of that order block that was newly created. What we have here is based on the fact, let me double check the range of today. Yeah, this is ripe for a breakout. We have a, let me measure so you get an idea of what we're talking about. You have $51, which is actually not bad for the ATR. ATR is currently at 88, so it tells you how much space there is still left for the market. This is good for, if you measure on, for example, on Monday, the range was 116, while the ATR, you can see it on the lower left border, it's not corner, I mean, it's 94, right? So it's clearly like almost 20% above 100%. Right? So that's an expansion. That's an overextended kind of a range. And obviously, if the average is around 88, that means that this one is basically it didn't reach the average. That is very typical because the market fluctuates in terms of ranges as well. Sometimes it's very equally ranged day after day, and sometimes it has these waves where it moves more than 100%, more than average on certain days and less on others, right? There is that sinus, if you will, kind of movement on a range. And it would be after a moment of high range day, which could be 1 day, 2 day, 3 days, there is typically the opposite happening, right? A lower than average range day, and then it goes back to a high range day again. The thing is, you don't always know in advance, what day it's going to be, but it's likely that the next, you're going from high to low to back to high, most likely. The question is, you don't know, the ranges doesn't tell you the direction, just the most likely range that a day could be by following the pattern. So the market is ripe for either today or perhaps tomorrow to have a bigger than average bar as well. So that's very interesting because we are seeing here a fresh order block being retested, and actually twice, right? Once here and then again. That's two reasons or two signals that the market is giving us that the buyers are really stepping in, not just once, in spite of having this bearish structure here, but twice, right? Twice back to back, basically. So if we get that follow-through movement out of that second one, you can be confident that here there is a lot of buyers coming in defending it. It can still fail, but it looks that's very comforting from the point of view of a buyer, right? So we had that possible entry on the 10 o'clock on today. Actually, it was more like a bit later on here. That was on 11 on that candle, or after that candle. But now you can see that the market is getting away. I don't know if you guys can see that, but you can see where we had a quasi right here, right? That's the quasi. It's not here, it's not a quasi, by the way, right? But it's on the lower time frame, on the 3 minute, I believe, or the 2 minute. It comes back to that order block, moves away, makes a higher high, comes back, makes a higher low. You see the strength, and then it hasn't broken this yet, so we're still in that range, but you can see here how it's making higher highs and that push higher. If nothing changes, it can change in the future, maybe news or whatever. There isn't any news for today, but hypothetical, there could be still unscheduled news coming in. But if it follows the same kind of script going forward, where it on the bigger market structure making higher highs and higher lows, an uptrend developing here or following because it was already developed, and higher highs putting in within this current range, the likely place is going to go is higher. It can still go lower, but the probabilities are just less. So that's something you want to be considering. And the fact that on the daily time frame we had yesterday a low range day, that's promising, because if you look to the left, right, on the daily, there isn't anything up to this place for price to stop if it's really going to break out for the next couple of days. If you look at it on the perspective of on the H4 as well, there is that level that we might not, I likely think we will be retesting, but if we can clear that up, maybe with a retest or even without one, just go through it, there isn't anything to the left, right? There's no order blocks here on H4 as well, all the way to the 4,241. I don't mean to say it's going to reach there necessarily. I froze. Did I freeze? Let me know in the chat. But all right, so let me zoom out a little bit there. All right, okay. All right, so let me go back to the chat to see what our viewers are. Thank you for confirming that I'm not frozen. Thank you very much. Let me zoom perhaps a little bit more. There, right? Okay, so the all right, so let me check here on. We had a couple of questions, which actually we have plenty of questions to look at since. Let me mark them. Actually, they're already marked, so let's take a look. All right. Don't forget, guys, like and subscribe. That's the name of the game. All right, Peter. I don't know if you're still with us. I hope you are. And I'm gonna discuss your question right now. Let's see if that's the last one. Okay. All right. Unbiased Trader is confirming the topic we were talking, some time ago about, copying and having different strategies for different programs. It's great to hear that you have a different, because that's perfect. That's good, because you will not be using in between the boot camps have the same traits, which is one of the things you need to think about or consider when you're thinking about copy traits. All other programs are freely to be copied, but that's good to know, my friend. All right, Peter. Peter has a question here. What's your take on my entry setup after making key zones? So this is EU, I think it was. So let's go to EU on the H. All right, so after marking key zones on H4, H2 and H1, I wait for a reversal setup on H5. I mean on 5 minute. That's exactly how I work, among other things. Exactly what I do, Peter. Once price taps the zone, yes, that's exactly right. I wait for the zones to be tapped. So I have the H2, the H4 as well. Let me mark it so we can show it to our viewers as well. Right, so we have the H4, H2. In this case, they're almost the same size. That's not a huge. Preferably you want the lower time frame to be a refinement, something like half or even less of the bigger structure. In this case, they're almost the size are almost the same, but it's still valid in my book. And I go to the lower time frames within these structures. So that's what Peter is talking about. Look for clear reaction on a fresh 5-minute order block formation, then enter or retest with my stop loss above the OB. And effective, how effective do you think this approach is? Very effective. Very effective. Yes, that's exactly how I trade. And I know the stats on my trades, even though you don't know all my entry signals, my entry triggers. And there are a couple of nuances that you didn't mention that I apply in terms of how I choose which area, when an area stops being valid to be traded, things like that. And it's very useful to using this way to enter your trades is very, very useful, because basically you're using multiple time frames telling you one thing. That increases the probability that the market is actually going to go in your direction. So you have the H4 creating a candlestick combination or perhaps a quasi. And then you have the H1, H2 telling you also the same thing. So that's the alignment that I talk about. And then you go to the lower time frames and you look for that quasi. And that's exactly how I trade, and looking for that. It is actually on the 3-minute. And you wait for these levels, these entry order blocks on the quasis, to identify where is the market likely to go to and possibly, you don't know for sure, but possibly react and reject. But it needs to tap into, as Peter said. And then, depending on your triggers, it will trigger or not, and that's it. And using it, putting the stop beyond the structure that you assume the market is reacting to. So in this case, my entry was based on something else, but looking at the price action, this would be the quasi. This would be the area that I was waiting for price to come back, tap into, and then reject. Give me that trigger. I get in and I put my stop above it. How much above is for you to find out, but above it, because you want to have your stop always, behind a line of defense. And if you think that this is the structure or the area that caused that reaction, then obviously you want to be having your stop loss beyond it, right? Because you assume it's going to hold. It held, and it's going to likely hold in the future for some time to come. And that's it's one thing that's going to stop you from being stopped out in the market, taking and reaching your target, perhaps that low, before getting your stop loss hit. All right, that's one question we had, and we have about 10 minutes. Today we have another session on Discord. You're all invited. It's always fun. Sometimes we talk about very serious stuff of round trading. Other times it's light, it's fun, it's entertaining, but it's always great time together. So yes, Butler here is talking about whether or not you move your stop loss to in the trade to break even. Some people do that, and they believe religiously that something should be done, should be applied, that could apply to everyone. But I agree with Butler. The data should tell you that there are things, there are moments, there are in my case, for example, I don't move my targets to my stops to break even only in a very specific situation. The rest of the day, during the first day that a trade is open, I do not move it to break even. Why? Because the data tells me if I do that, it will cut short trades that would have been otherwise going to my TP, that would not go to my stop loss, right? So it comes back to my entry, doesn't go to my stop loss, but eventually will go to my TP, and I will be and that happens more often than the trades that are actually coming back to my entries and will hit my stop loss. the first one, the former one happens more often than the latter one. But that's only my case. It may not be your case. It may be your strategy is based on the market moving and just running, and if it comes back, that's a sign maybe for your strategy that the entry or the setup is no good anymore. So it depends. It is not a one size fit all rule that will apply to anyone. I don't think it is. I'm pretty sure it isn't. And Butler says this right here, right? All right, let me double check here. Anything else? All right, so I think I covered most of the questions, at least the ones that we had here. Perfect. All right. Let me double check here. Okay. Unbiased trader telling us about his trade on NDX. 2 wins, 2 losses. Oh, let me put it on the screen so you guys see it. 2 wins, 2 losses for the day. Overall minus 1% on the 5ers account. Unbiased trader, thank you for that share. Everyone should be doing this, being open about their winners and especially with their losses as well. Why? Because this is the reality of traders. We don't win the day all the time. We don't win I don't win 1 to 20, all the time. It's not even the majority of the time. Of course, when you do get these big wins, it feels great and it makes a huge difference for your equity curve. But a lot of trades are just 1 to 2, 1 to 3, a lot of them 1 to 5, and they're not even my win rate is not even that high. Doesn't even come near 50%. So the majority of the days, not the days but the trades, if you look at them, I have big numbers, not big numbers, but quite a large number of trades, chunks that are losing, right? So I might end the day in, if I only take 3, I might not win that day. But it is about the bigger picture, the longer stretch of numbers, not one day, but multiple days, and you will see the edge playing out, and it'll then come back, right? If everything you did on back testing is done properly. But showing losses, I think, is actually good. It shows you that it's okay. As long as you follow the plan, as long as it is the result of good process, losing is actually a good trade. So as long as it's following your program, your trade plan, losing is great. I mean, it sounds weird, but a perfectly executed loss is a great trade. I don't care what you feel or what others might tell you, you're still losing, but a perfectly executed, even if it's a loss, is a great trade, because that is what you need in order to translate or migrate the profits that you get in your back testing to your forward testing, right? That's what will matter in the end, not what you can measure in your back testing. Great, you're profitable in the back testing, but if you can translate that into the future, into real trading, then it's no good. And what will get that translation from back testing to forward testing is you will need, of course, the profitable plan strategy, but certainly you will need the perfect execution or near perfect execution as well. If your execution isn't up to par, it will mess up with the profitability of your system, probably even eat it up. So I don't care if it's a losing game. If you executed it perfectly, that's something to celebrate. That's something to be proud of, certainly. How many trades we have to do every day? Trade like paradise. There is no obligation. There is no minimum. You don't have to be trading every day. There is no certain number that needs to be taken, every number of trades that need to be taken every day or every week. There is none. Why? Because it depends on the strategy, on the time frame, on where the edge is. And so what you need to be doing is you need to collect the data. We talk about this all the time, but you need to have a plan, right? A profitable plan that you back tested, that you tested on paper or on the screen, whatever, where you want to be registering the trades, where you validated, you confirmed, you measured the potential, the profitability. And then what you want to do is you want to see what the statistics of that strategy is, let's say in the last 3 months or 6 months, even better if you can. What is the average? What is the average of my strategy? Is it 1 trade a day, 3 trades a day, 10 a day? And that is a good indication of what you can expect in the future. But it's not an obligation, right? You only need to be taking the trades that are actually setting up, that they trigger, and they check all the boxes. If you will have days where there is none, and there's nothing wrong with that, you're just following the plan. If the plan didn't trigger, then there's no trade to be taken. There is no minimum amount of trades. However, you should, if the strategy, let's say you have a trade plan and it tells you to enter when you get, from A, B, C, and D is, present, and it triggers you, and this is exactly what you backtested. This would be a trade that you would be adding to your backtesting. Were you backtesting, then you need to take that trade. Unless you can't manage it, you're not there, you're not available, then there's nothing you can do. But if you are there, there's no second guessing. You should take the trade, right? So that's it. You just take the trades that your system tells you to take. That's it. And if the number of trades deviate a lot on any given day, if they deviate a lot from the measured averages, let's say you have a range between 1 and 4, and in one day you're trading like 8 times or 10, that's something you need to think about, whether or not reassess, recheck if really all those trades are valid, because that's unlikely to happen. It can be still that they're valid, but it shouldn't be like that. It shouldn't be that you're taking 3 times more trades than usual. There might be something that is going, something is not fine, and you need to figure that out. But in between the range, you just trade everything the trade plan tells you. That's it. You should be trading actually in a way of stating it. You should be trading the same way you did your backtesting. If the backtesting you took 3 and sometimes 5 signals in a day, you should be taking them as well now, and not say, well, I don't like taking 5 because it's too much or whatever. No, if you did it on backtesting, you should be doing it on your forward testing or on your real trading as well. As we are getting to the end of this stream, please do not forget to consider liking the stream, engaging us, coming back, and perhaps introducing this stream to your fellow traders, your friends who are having an interest in trading, and subscribe to the channel. We're only 500 or so subscribers away from hitting that 90,000 maybe 90,000 subscriber. Maybe we can even hit that this week. There is a chance, right? We still have tomorrow. I really hope for you guys that we hit that, because then we'll be having that giveaway very, very soon. All right, so trade like a paradise says, I made many profits, but I lost end of the day. Yes, it happens. As long as you follow your process, as long as you follow your rules, we can't control the results of any given trades or the result of any given day. You can't. Just accept it. The only thing you can control is you following the plan. That's it. And that's your job. You should just following the plan. That's it. Whatever happens, happens. And if you have a good plan, eventually you would be winning. Your equity will be sloping upwards. All right, so that's it for today. I would like to thank everyone who has been very kind to us and engaging us in many, many ways with great questions and great interaction. There is a Discord session in about 45 minutes. You're all invited. There's 10 hub credits being given away during today's session. That's $10 for a lucky person. But more so than the 10 hub credits, there are so much being shared by all the members and the ones speaking that it's a lot of great. It's a great opportunity to meet and interact with other traders, ask your question, and you'll get perhaps 3-4 advices or tips how to deal with whatever you are asking about. And it's just great sharing and being part of our community. So you're all invited in the ever so great community we have at the The5ers in the Discord server. And so thank you all for our time here with you, allowing us to be with you. And as EU is switching over or switching direction after it hit the took liquidity, you could see sweep that low, that liquidity. Aaron was talking about this very well identified, where it changes direction and is going in the direction of the impulse we saw before. So on that note, I'd like to thank everyone and tell you all be safe and see you all soon again. Bye bye.